we'll just mute your audio. And we'll send you a message. No, it's an automated system that's listening for copyrighted music and checking that against any available license. So if I'm broadcasting and suddenly, we get whatever this is, Beat for Us or House Theme, and I accidentally broadcast it out there, first thing that will happen is probably within 5 minutes or so, they'll pick it up and it'll mute the stream. They'll keep broadcasting, but I'll get a little pop-up saying, hey, warning, copyrighted music, either upload your license or stop broadcasting your music. And then you say, okay, and it gives you your sound back. If you do it again, they'll blank you for, I think, 5 minutes. So stream goes down, video's gone, audio's gone, and they'll say it again. Upload your permission or stop doing that. If you do it again, they just kill the stream. You're blocked, you're banned, stream's over. YouTube is free. You just go navigate over to the...
Hello. Good morning. Wow. Where's everybody? So we got 1,000 people registered, but half of them are still asleep. Anyway, welcome to the Startup Conference. This is our 7th year. I am your friendly host, Nima. Our first speaker is David Bloomberg, and I have a funny story to tell about an experience I had with him. So Bloomberg Capital does early stage investments, some really cool companies, iSocket, Hootsuite. And one of the companies they invested in is called AppBoy. It's a CRM for mobile. And the story is that 5 years ago, we did something really cool at South by Southwest. We had an RV, and we had investors on the RV, and we tweeted out our location, and people came onto the RV and pitched. And that's where David, I think, had the initial conversation with Mark from AppBoy, and I think they just raised $20-something million. So I feel good about the cool stuff we've done with him. He's an awesome guy. If you are in the stage of raising money, getting Bloomberg Capital to invest in you is a great thing. So with that, oh no, he's not ready. Clicker, he forgot his clicker. Come on, David. You're holding up traffic. Is everybody awake? Seriously, come on. All right, give a big round of applause for David Bloomberg. David?
Thank you. Oh, I probably need that? No, I don't need that. No need for two microphones. Greetings, everybody. Everyone revved up to become great entrepreneurs and build great companies? One more time. Much better. Okay, tremendous. It's an honor and a privilege to talk to entrepreneurs. We at Bloomberg Capital feel that you drive the Ferrari and we're the pit crew. That's our metaphor. We're not your masters. We're not the musketeers or the marionette masters who pull your strings. That's the wrong model for venture capital and entrepreneurs to work together. We think you have the great ideas. You do the really hard work. You stay up eating pizza and beer on the weekends, etc. And we're there to give you resources. First is money, and then it's help recruiting, it's help finding customers, it's help with strategy, all that stuff. That's our model. Today, our topic is unicorns, because everybody talks about unicorns. But first, to talk about anything seriously, we need to define it, put it in context, and then try to figure out what does it really mean, and how can you benefit from it. So that's our goal. And the first question is, do you have what it takes? Well, you're all in the room, so the first part of what it takes is showing up, and you've done that. Let's move right in. So I'll move it. How do I need to point this to anything? There we go. How rare are unicorns? First, the definition. Unicorn is a recently defined term. It means basically a company that's still private and worth $1 billion. Now, in history of the world, that is very rare. It's much easier to do now than ever before, but it is still relatively rare. But there are factors that have caused it to be both easier to grow a company faster than ever before, and I'll talk about those, and they've caused people to not go public. There's sort of the push and there's the pull, or different forces. So let's talk about the numbers. In terms of numbers of unicorns, there are approximately now about 163 worldwide. Now, remember, when they go public, they no longer are a unicorn, or if they fall below the $1 billion mark, they're no longer a unicorn. There were 80 that reached that status in 2015, so probably the peak of a market. And part of that had to do with valuations. Valuations in 2014-15 were really on the rise, and we've seen a retrenchment of that since then. So maybe some of those are no longer, but that's what caused such a huge pop in 2015. But again, there are these other two forces. First, what are the negative forces? I'm trying to remember if I need to advance the slide now. I'm going to stay back here. One of the forces that is causing people to stay private longer is Sarbanes-Oxley. This is a bill that was named for two senators in the aftermath of the Enron crisis, back a decade ago at least. And they were trying to root out, Congress's idea was to try and root out corruption in financial accounting of large firms that were going public and hurting the public with pensioners owning the stock and so on. Now, there's a benefit for regulation, but there's also a cost. The cost was that every company had to engage in a lot more accounting and legal rigmarole and red tape and process that was very costly. So that it costs, I've been told, about $3 million to prepare yourself to go public just for the Sarbanes-Oxley part of it alone. There's other costs. But if you're making 10 million net EBITDA, and then 3 million of that leaves your pockets because you have to pay it for these regulations, and then you're going public, you've lost maybe 30% of your market cap. So it's a very big pain for the private investors and the entrepreneurs like you, which aspire to grow great companies. So people have been staying private longer. That's one reason. Another reason is there's been a decline in buy-side research on Wall Street. When I was a young analyst out of college at T. Rowe Price, we had a lot of us analyzing pre-IPO companies so that we would know which ones to buy on the IPO. And that we were assisted by huge numbers of sell-side analysts. And we paid them in what's called soft dollars. We would trade commissions with, say, Goldman Sachs or First Manhattan or different firms at the time. They would give us access to their research analysts for free in trade for us trading through them and buying our shares. A lot of that's gone away for, again, some government reasons and some structural reasons in Wall Street. That's another reason. A third reason is tort litigation. A lot of firms that went public in, say, the 2000 internet boom didn't probably really justify going public. They didn't have a lot of revenue. They were being hyped up a lot, and they fell dramatically. And it led to a lot of lawsuits on behalf of shareholders who felt that they'd been deceived. So that caused a huge amount of risk and liability for people who now go public, because they say, if our stock falls, we're at risk of being sued as board members, as investors, as entrepreneurs, et cetera. So it's another factor that caused people to say, wait a minute, maybe we don't want to go public so soon. Let's be steadier. So those are at least three reasons, and I'm probably forgetting another one. But there are a number of these factors that have caused a whole set of entrepreneurs to say, let's wait. Now, why, on the other hand, is it easier to grow a unicorn now? Well, I think most of you know that. The reduction in CapEx. It's become a lot cheaper to start an IT company, especially, because you don't have to buy a mainframe and a big telephone exchange system that used to sit in your offices. That's part of it. Also, the growth of the developing countries in terms of their market, moving hundreds of millions of people in the last 30 years from poverty to middle class, where they can access apps, they can even buy smartphones, and be part of this economy. I'll give you an example. We have a company in our portfolio, Hootsuite, which has done phenomenally. They're based in Vancouver, Canada. They do a social media dashboard for marketing, social media management, and they now sell in, I think, 190 countries. It was not easy, or maybe even possible, to sell in 190 countries when you're an 8-year-old company, say 20 years ago. The networks didn't exist, the internet was just beginning, no smartphones, and a lot of poor people in the world couldn't afford to be part of the app economy or social media. So a lot of things are better for you today than they were just 20 years ago, because we have this, we stand on the shoulders of giants. We stand on the shoulders of these incredible people who built the internet, smartphones, the social media networks. Those things we take for granted, and cloud infrastructure. So that's why it's much easier. Another big thing about the difference between then and now, and why it's easier to build companies fast that become unicorns, is the SaaS model and freemium models of selling versus the old enterprise model. That model was much more linear in its growth patterns. We see a lot of non-linear growth patterns in SaaS and channel sales that Bloomberg Capital tends to invest in mostly. I think you understand this, so I want to not belabor it. But those are the factors, again, keeping companies private, we've reviewed first, structural, regulatory. allowing you to grow faster, and that's what allows us to have a lot more unicorns than ever in history. And they're semi-rare, but let's do the statistics. Now, we've talked about this, that it's the best time ever in the history of the world to be an entrepreneur. And people say, oh, but there's a recession coming, David, and it's scary, and there's geopolitical crisis all over the world, and a lot of danger, and interest rates may rise, and China might fall apart, and Russia's invading, and the Middle East is falling apart. A lot of problems. But we are, first of all, in somewhat of a bubble. Silicon Valley and productivity of high tech seems pretty strong for the future because it's really bringing stuff that is much faster, much cheaper, and much better to the market. That's a safety. If you're selling a commodity like oil, we've seen what can happen when supply-demand changes dramatically. But if you can bring something that's fundamentally better to the market, you can cut through even bad business cycles. And that's what we're seeing, I think, right now. That's why I think this cycle for Silicon Valley will be very different than the 2000 bubble crash, when it was really wildly inflated valuations that came crashing down to earth. Remember that in March of 2000, the NASDAQ reached a peak multiple price earnings of 175. Today it's about, what, 17, 18, 19, something like that. So it's way different. We're falling out of maybe a second-story building instead of out of a 30-story building, as we did in 2000 timeframe. So very different conditions. Rise of efficient distribution channels, we've talked about that. Social media, smartphones, et cetera. Make your life a lot easier. You can reach a lot more people across the country, across the world. We've talked about a growth of emerging markets. Now, access to education. This is where you're participating today in something that didn't exist very much 20 years ago. Entrepreneurs talking to entrepreneurs and investors, understanding what it takes for you to succeed. We want you to succeed. Even if we don't invest in you, we have a vested interest in wanting you to succeed. There's a very big karma effect in Silicon Valley. And if we give out and help you, you're going to do better, and it builds the whole ecosystem. It's a very positive cycle. And it's different from other industries where it's very much zero-sum. I don't think Silicon Valley is very much zero-sum. It's very much synergistic, 1 and 1 equals 3. Now, the access to education, formal and informal, you're taking advantage of it right now. But as you also know, you can go home tonight and watch YouTube videos of excellent, amazing entrepreneurs who've struggled through incredible difficulties and persevered. We want you to take advantage of that. And now people in a rural village in India can also have that same education. It wasn't possible 20 years ago. Next, angel investors. How many angel investors in the room? Few? Okay. Mostly, how many entrepreneurs in the room? All of you. Awesome. Okay, well, the angels are super important, and we at Bloomberg Capital respect them greatly. There's some VCs who take a different view. I've heard some VCs say to them, they don't deserve the title angel. They should just be called individual investors, to kind of somehow diminish their worthiness. I say, of course they're angels. They're taking a risk on you. They don't do much diligence. They're trusting you because they know you as a great entrepreneur, as a great person, great character, great fortitude, great persistence. That's a good thing. And thank goodness we have a lot of great entrepreneur angels in the Valley. But that movement is spreading. I'm seeing great groups of entrepreneur angels in Tel Aviv, in Berlin, in Hamburg, other places around the world, London, et cetera, et cetera. And that's a good thing because you know them best and you know them first. Generally, VCs hear about deals second. Angels come first. We at Bloomberg Capital like to work with angels together. And we're not going to kick them out of the way and say, we need the whole deal. We're taking 100% of this, get out of the way. We say, no, wait a minute. We'll structure it. We're a professional firm. We're 24/7. We have 9 investment professionals, 3 countries. We've invested in many countries and dozens of companies over the years, have $500 million under management. So that doesn't match most angels. But they bring their value too. Angels bring great value in their specific domain expertise, in their patience and understanding and time they can spend with entrepreneurs. It's a good synergy again. And then last is large corporations. This is also somewhat new. There have been cycles. Corporations go through love with venture capital and startups, and then they fall out of love, and then they go back and forth. I think this relationship is going to be enduring. And here's why. Product cycles have shortened dramatically. As they've shortened, the big companies realize they need more access to innovation. And where does innovation happen? Does it happen generally in the big labs of giant companies with thousands of processes and rules and bureaucrats? No. They generally happen from people like you, a group of 2 or 3 founders, create something new, strike out, have incredible equity incentive, get risk-taking investors like us to follow them. And that's where most of the innovation in the last years has happened, from startups. And then they get acquired or they go public themselves. So the big companies increasingly come to us, Bloomberg Capital, and to many of the great venture firms around as filters. We find you. Our firm sees about 3,000 or 4,000 business plans a year. We probably meet with 600 or 700 companies. We might invest in 15 at the end of the day. But large firms, a Samsung, a Ford, all these big ones, they come to us and they say, tell us what you got. What have you seen lately in Internet of Things? What are you seeing in artificial intelligence? What's the latest thing in insurance that we need to know about as a big insurance company who happens to be one of our investors? It's a great thing for you, because if they're interested in you and we can be a facilitator and give you credibility and get you in the door faster, you can get a proof of concept, you can get a beta site, you can get early customers. That's how it works, and it's working well. All right, now, what does it take to pitch an entrepreneur, to pitch a VC firm or an angel? Here's a simple 6 T's that I learned from Neil Weintraub, a distinguished VC himself years ago. I may have changed some of his terminology. First, tell us the theme. What is it that you're pitching? And be crisp, articulate, and brief. Tell us in 1 or 2 sentences the big problem you're solving. Okay? Second is the team. Who's going to do it? It's you. Don't fake it. Don't pad the resumes. If you have a B player right now, temporary, it's okay. Say, here are 3 A players, and we're going to look to improve this one. Mr. VC, Ms. VC, can you help us with that problem? Yes, that's our job. We have a huge network. We know a lot of people who can help build and add to your team. Next is terrain. What is the market? Are you early to market and you have to do a lot of education, channel building? Are you late to the market and it's a commodity and you've got to really work on pricing and market fit and all that stuff? That's important. And know your terrain, know your market, and know that you don't just exist in a competition of Silicon Valley. There are a lot of smart people in India, Israel, China, Japan, England, France, looking to compete as well. So get the global terrain map, not just Silicon Valley map. And tell us, please be honest, and tell us why you're better, where you may have weaknesses, and how you're going to address those. Integrity and honesty and transparency are so crucial to you getting our money and to having a good relationship after that. Never compromise on those. And when you talk about your risks and the terrain and the market, it's one of our clearest indications of how honest and transparent and persistent you are. If you've scoped out all of your competition and you really know where you stand, to the best you can, and you have plans to deal with it, that's a big sign to us that you know what it takes to win. Second is technology. Fourth is technology. And notice it's not first. So if you're engineers, and most of you are, don't only lead with, oh, our technology is the best because it's built on this architecture, blah, 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 blah. First, you have to start with the theme. Why is it solving an important customer problem? And then the following down. Who's going to do it, et cetera, and what's the market? Then you get to the technology. How does it work? Why is it differentiated? Why is it superior? What are its costs, benefits, et cetera, et cetera? Okay. Then is, and it doesn't have to be just pure technology. If you're in a consumer thing and you have some great brand who's allied with you, if you have an incredible domain expertise, all that can be in the realm of your value-add proprietary IP, let's say. Then there's traction. Now, traction, essentially, we who invest mostly in seed and A rounds often invest in companies with no traction, at least no revenue. Sometimes you've built a product and you come to us and we say, that looks really good. And we have a CIO council. We test it out. We say, if they built this, Mr. CIO of IBM, Ms. CIO of Hewlett-Packard, would you buy this kind of enterprise software? And often we'll get a yes, medium, or no. If we get enough yeses, we say, wow, that's great, we invest. So traction can be validations before you actually have monetization. But of course, if you have monetization, if you have users, that's wonderful. So show that. And that will also be, again, are you early to market or late? And explain your strategy in either of those cases. And then finally, the terms. How much money do you need? What other important aspects do you want a board member? Are you need advisory boards? Other stuff that are important to you, and we negotiate on that. So those are the sort of 6 points you should get across crisply in maybe 20 pages of a presentation that you send to us, which is the easiest way to connect with us. Now, all these unicorns have different paths. Not everything is going to go on the same path. On this same path. One is that you raise a lot of money kind of all up front. That's not easy to do for most people. That is probably a path that is done by a serial entrepreneur, somebody who's already famous, already had a success, and they can raise a lot of money up front. Other folks is to try and get the traction first and try and show and demonstrate, bootstrap it for a while. That A has an advantage of giving you more equity for a longer period of time down the road, so less dilution to you. And it makes it easier for us to eventually make that decision because, yes, you've already proven by your own efforts, by your own bootstrapping of customers, that you have what it takes. And we don't have to do those if they build it, would they buy it, because you've already established that and demonstrated it. So I would say today, in the environment we're in right now, compared to a year ago or 2 years ago, it was a little bit the vision thing. Let's see where they're going and the big story. Today it's more investors are from Missouri. Show me. Show me what you've got. Show me what you've done. Prove it to me. Demonstrate it. Validate it. That's more where the mood is today, I think, in the investor community. And then there's the third path, and that's the path that most of you will follow. That is like a Mayan. I just came back from Cancun and Chichen Itza. The Mayan pyramids are stair-step pyramids. They're not like the Egyptian pyramids that are like smooth. The Mayan pyramids have stages. That's generally the path you're going to follow. And this path means that you have to build toward a milestone. So the first amount of money is to get you probably product and into the market. Initial testing. This A round is probably to get you real product market fit. The B round is to get you growth. The C round is acceleration. D round is on your way to public. Something like that. And it varies. But that's the basic idea. So these three paths: get a lot of money, generally not available to most of you up front. Second one, bootstrap. Not the path chosen by most, but it's a great path if you can do it. And the third path, which most of you follow, is stair-step financing per milestone. One of the things that I think people have gotten really wrong lately, and that's because some of the unicorn myth, is they think that they have to have the highest valuation at the very beginning of their company. And that's just not going to be realistic in a cycle like we are now. When you're in Missouri cycle, it doesn't work. You have to move at pace. Now, what's the reality check? The reality check is that we're in this tight environment we've just talked about. So check yourself out and don't look in the mirror and say, oh, everything's great. It's going to be tough in the next couple of months. How do we survive? Well, there are a few things. One, we've talked about getting the capital first, some, not all of it, at realistic pricing. Get traction, demonstrate it as best you can. Get ahead of the issues. If you start to see a downturn coming, like right now, you've got to watch out and figure out what to do, because otherwise, if you don't get ahead of it and get the money, you're going to have to get out, probably sell the company. Okay, that's not a disaster. Life is very long. You're going to all live to 100, and you can do multiple companies. So if you don't get the money or the traction and get ahead of the downturn, you're going to probably have to sell out, probably earlier than you would have liked to. So last bit is, and I'm just running out of time, I'm going to put all these on here and see if I can have time for this. The odds of raising venture capital are over 100 to 1. It's very hard. 400,000 companies are started every year. 4,500 get financed in total, not just startups, and 15 million to 1 on winning the lottery. So you have a better chance of raising venture capital, even doing a unicorn. Reach for the stars, but make sure that your feet are firmly on the ground. Make sure that you are being realistic all the time. And be passionate about it and build a great company. The rewards will follow. So don't try for the rewards first. Try for the great company, and the benefits come later. It's like a good marriage. Okay, thank you so much. Enjoy. Carpe diem. Cheers.
David, thank you so much. Okay, so question. Who has a conference call scheduled this week? Anybody? You should do more conference calls. Anyway, if you've done a conference call in the last, 5-10 years, it's probably been on freeconferencecall.com. And I'm gonna call this a unicorn. So David, come on down. David is the CEO of freeconferencecall.com. And during our first conversation, he actually told me that he never took institutional money. So this is a unicorn. 1 billion calls, right?
Billion and a half.
Billion and a half calls, 800,000 businesses. Anyway, David Erickson from freeconferencecall.com.
Thank you. I got this. You guys hear me? Good. So I'm Dave Erickson. I'm the founder of freeconferencecall.com. I'm going to talk to you a little bit today about, kind of the spark of innovation, the idea that got me going, and then the path I took from being a startup to becoming an industry leader. The unique thing about the story is We never took any institutional capital. We never took any debt. And when I mean we're debt-free, we are debt-free. And we did everything on a bootstrap. I was told about 25 years ago by a guy, in telecom, you build recurring revenue and you make money while you sleep. And that idea to me just like it infected me. Like I kept thinking about it. I wasn't even in the telecom business at that time. And I literally changed everything in my life to get into the telecom business because of that one short little conversation I had with that guy. The idea that I could build these recurring minutes and make money while I slept. And I found myself 8 years later, an agent of a couple different conferencing companies, out there hustling conferencing. And then I talked to another guy and he said, that you can make money on minutes, incoming minutes, the ingress of minutes into a network. And I never knew that before, that one phone company pays another phone company to get to access into their network. And all of a sudden it was like, pow, right? 2 minutes ago, I didn't have the idea. 2 minutes later, I'm going to spend, the better part of my life chasing that until I figure out whether or not I can do it. And I thought, oh my gosh, if I could take the organizer fees out of a conference call because I could make money on the ingress of minutes, I could create a free conference call. On October 26th, in 2001, 3 a.m. in the morning, I'm sitting in bed going, man, I wonder if freeconferencecall.com is available. And at that point in time, I didn't have a computer at home because my computer was at the office. I had one computer. It was not a laptop. And I was going absolutely crazy, thinking somebody was going to get it at like 3:15, and I wasn't going to get the domain name if it had been available, and that was going to be, the whole deal. Anyway, it was available. Put the company together, did a lot of the work myself. We're seeing about 5,000 to 7,000 new customers a day. We're in 800,000 different businesses. We are the third largest provider in the United States, and so we've got like Intercall and AT&T in front of us, who did a lot of acquisition, and the other one is AT&T. But we'll take AT&T probably in the next year or so. We've done over 1 billion calls. Our calls are long. We have a 30-minute call average. We've done a little over 1.5 billion calls. And today we'll probably do 100 million paid minute transactions on our network. So pretty impressive where it went. So how'd we get here, right? In the beginning, I was broke. I was busted. I was selling conferencing as an agent, and I was just kind of making it by. And I liked the minute game. Right? I didn't have any access to money, but I knew this idea was good and worthwhile, and I poured my heart into this idea. So I built that website myself. I built all the code myself, and I wasn't a coder. I was just, and it was pretty whack, right? I mean, it wasn't like picture perfect, or there was technologists at the time that kind of said, look at that, that's there was no shame to my game, right? I was out to do this thing, with what I had at the time, and did okay with it, right? Got it up and going. I answered the customer service line. I put a toll-free number on my website, and I answered the customer service line for 918 days without a break. 24 hours a day, 365 days a year, and you think, well, that's impossible. How could you do that? When you're starting up the company, there isn't that many customers, and those calls aren't coming in at like the basis that they are now. But I was up at 3 a.m. in the morning, sitting on the corner of my bed, 6 in the morning, listening to people read the frequently asked questions on my website. I was all in. And I was all in not because it's cool to say you're all in like the poker player. It's like that's just the way it was. I was all in. And sometimes, it felt like I didn't want to be all in. I got tired. you know, trying to survive from that point. You know, they've got the old turtle conundrum, you know, that 32% of the turtles make it to the sea, and, you know, the other 68 got a tough time coming. I like this one guy with the circle around him. He looks like he's going to make it. He's got his head up. He's got good posture. Guy in the background there looks like he's high-centered on a dirt clod or something, right? You know, I don't like his chances. 3 out of 4 businesses, startups, they say don't make it. I read another thing from Forbes, and it says 9 out of 10 of them will not earn a return. And I know there's businesses that never earn a return yet are successful and have some kind of exit or something. That's beyond my pay grade. I don't understand that. The only thing I know is you know, how am I going to make a return, right? And as a bootstrapper, I've got to make money. I've got to make money now. We ran into problems, you know, after we got it up, got the plane in the air. We had regulatory issues. We had big guys like AT&T and Verizon not wanting me to do what I was doing. We had the FCC trying to rewrite the laws for the big guys, all kinds of stuff. And so I literally had like plan A, plan B, plan C, plan D, plan E, plan F, and was trying to work them all. And one of the things that I see in a business plan that's difficult is that people expect you to follow it. I don't really write business plans because then I would have to follow them, and I want to stay flexible and I want to stay agile because I wasn't coming from a big bunch of money. I was coming from just a lot of energy and a startup mentality. And so I would set up all these different things. And if you see something that's bright and shiny, you got to be, you know, cautious about it. But sometimes your business plan is going to lead you to something that's yet another spark of innovation. And so be flexible. Taking the first step. You know, I think you'll hear a lot today from different people about how to raise money, you know, doing your valuation and things of this nature. Some businesses absolutely need that, and that is a very functional part of this whole system. However, going and raising money or going and trying to get a valuation for flattery or because you feel honored by it or somehow it justifies your plan or makes you feel like you're headed in the right direction, it's tricky business. If you're going to raise money, you should know that you have to raise money and then do it very carefully, right? And there's guys here that are better at that than me, and I'd listen to them. But if you don't have to raise money, don't. Today I stand up here, I'm a free man, right? I answer to nobody. I do not even have a board of directors. I answer to no one. My wife, I answer to my wife. Right? But I started with a $10 domain, right? I started with a little tower computer. I started with a website from GoDaddy at $9.95 a month that included email, a toll-free number, and a telephone line, and me. And that was it. That was the investment. That was the startup. Answering all those customer service calls, I got to know my customers. There was people that said, Dave, isn't there a better use of your time, dude? You're like walking around, you're on the cell phone, you're answering all these customer service calls. Can't you just pay somebody to do that? Aren't you better spent somewhere else? And they'd get me every once in a while. I'd be like, oh, yeah. Like, you know, but I don't have the money. But you know what? Answering those customer service calls put me in touch with the customer. I had my fingers on the pulse of the people that were coming to my website, and at times I didn't even know how important that was. The changes that I made, the things that I did, right? When I put new frequently asked questions on the sign-up page, my calls got cut in half. Do you think I did the right thing or the wrong thing? That was like the right thing. I knew it right away. I was right there. So being small, not going for the big money and doing all of the fancy stuff in the beginning can be very, very helpful. So freeconferencecall.com is a viral business. And viral business is like the greatest thing in the world, I think. You know, how does a guy like me with my little tower computer get into 800,000 businesses without a salesperson? Viral, right? But viral is also very tricky You know, in 2005, things were going great, and customers were coming onto the network like crazy. I was a bootstrap dude, and we literally got to this point where if we had more customers coming in, the whole thing, I think, would have blown. We were just at the peak of our bridges and everything. I cut back. I was doing some pay-per-click marketing at the time, and I turned all that off, and we were like coasting, and we just made it to the other side. We haven't had that problem since. So viral's interesting. It's very, you know, everybody wants it, but it's uncontrollable. And I found that, you know, I once looked at a round of private equity just to see, you know, maybe take some chips off the table or something, and I ultimately didn't end up doing it. But they were asking me, so what would you do to enterprise? And I said, well, you know, in enterprise, I would hope, I mean, I would love to get a viral movement going like I had in retail. And I'm not sure how to do that, and I don't know how that would work, but I think I could do it like this and that, but, you know, it's tricky. And it was interesting because the guy said to me, he says, you know, I get people in here all the time, and they tell me they got an idea, they got a startup, and they're going to do this, and they're looking for money. And I say, well, how are you going to get out there? How are you going to get all the customers? And their answer is, it's going to go viral, man. And he says, that's when we stand up and say, you know what, we're done, right? And he goes, and here I've got a guy that's actually done a viral company, and he wants to open up a new fold and go to enterprise. And he's smart enough to know that it may not be possible, right? Viral's difficult, and so if viral's a big part of your business, you got to think twice on it, think long, think hard on it, and hopefully it'll happen for you. Upgrading products. So, you know, as a startup, I didn't have all the money that I wanted. I wasn't able to build everything that I wanted to build. And I had a guy that came out that was kind of like a copycat, and he had money. And I saw him at a show, and he was telling me about this new big server he was buying and all of the reservation and invitation systems and everything that he was going to put into it. And it was just like features galore. And I'm like thinking mine's so simple and his is going to be so great. And I was like crying at my lunch that day. I was like, oh my gosh, you know, this guy's just going to crush me. And, you know, what ended up happening is he built like an airplane dashboard or something. You know, I mean, it was all this scheduling and so he alienated his customers. And as I was working those customer service lines, I was seeing those customers come over and complaining about a service and saying, oh, this is so simple. Or, you know, they had it confused with my service and found my service easier. And so that's something to, you know, just because you can upgrade doesn't mean you should. The innovator's dilemma, you know, this is an interesting thing. I see new companies come out, they're funded, they've created some new problem in our industry, they've created some new solution to the created problem, and it sounds really good. And people in my company are like, hey, you know, maybe we should make a turn right here and go do what they're doing and you know, make that happen. And we have something we're doing. And I'm like, well, do I go and change? You know, is this the free conference call killer? Do we need to like come up with our own free conference call killer in order to save our lives? And it's really tricky. But I've also now got hindsight, and I look back and I see a lot of carnage. People that manage their businesses the wrong way. That you know, solution to the problem they created wasn't really a big deal. And so, you know, don't get all excited and take a turn just because you see somebody else doing something. Believe in what you're doing. Know your customers. I mean, I think that's the key. Believe that you know what's happening with them. So I have 5 principles for you guys. And out of my 5 principles, 4 of them are about people. And the reason why I feel 4 of them are about people and should be about people is that in freeconferencecall.com, the greatest thing that's happened, even above the wealth that's been created, is the wealth of the relationships I have. I can stand in front of you today and tell you that I've met the finest people I may ever meet in my entire life. And I know that one man that no longer works at the company, that we still have a bond, is something that I didn't even understand a bond like that happens. And so I think, you know, the first thing is what I call the underwear test. It was put out there by a guy by the name of Lure. And the idea is just keep a thrill, keep a mystique, keep something interesting about it, right? We've been in this game for 15 years, right? 5 years in, you're 10,000 hours in, right? If it's just as simple as putting on your underwear every day and it's that common, I don't like your chances, and I think business should be more exciting than that. I think you should find the niches. That's where you're going to find the riches. I think that you should not take everything that you can do. There's a lot of opportunities. We have more opportunities than we have operations. But I don't want to do everything, and I don't want to do low margin business. I want to do the fun stuff. I want to do the exciting stuff. I want to keep it exciting. I want to be a visual manager. I want to have relationships with my employees. Keep it fun. Maintaining perspective. It's a balancing act. You know, I'm an idea guy, right? I'm a leader. I always want to use my idea, and I want to lead the people, right? First, you got to know your customer. Then you got to know your employees, and then you got to know that your employees know your customer. And if all of that's happening, well, then every once in a while, you got to trust your employees, because there's 6 ways to skin a cat. Hey, you go do it your way. Let's kill this thing. And what's interesting about that is you know, not being the guy, letting somebody else take the lead. It's amazing, right? It's a great place to be. Sometimes you see that they did a better job than you thought you could have done, or you got more out of it than had you done it yourself. Letting your principles speak about who you are and what you believe in. Here's the deal. I think all companies need this, but you got to believe it, man. You cannot fake it, right? Freeconferencecall.com probably saves more carbon than any business. I don't know. I mean, all the people that don't fly, but that's very convenient. I didn't get into freeconferencecall.com because I was trying to like save my carbon footprint, right? I got into freeconferencecall.com because I'm a minute guy and I wanted to make money while I sleep, right? So that's a very convenient thing to say, hey, this is what we're into, right? What I believe in the homeless children in my city, the sick children, and I influence my employees to go with me to run 5Ks and do things together that get them involved. And then I also try and figure out what it is they believe in, and I want to get involved in that. But it's very, very tight. It's within my community, and I can see the progress in the things and the effects that it has, both on the people we're trying to serve, but us as serving those people. The power of a movement. I think this is the most amazing thing to me, right? You can buy a guy's time, and you could buy a guy's time in a particular place, and you could even get a measured amount of muscular, skilled motions from a man, right? But you cannot buy initiative, you cannot buy loyalty, and you cannot buy the devotion of the heart, mind, and the soul of your employees. That you're going to have to earn. That you're going to have to earn. You're going to have to go out. You're going to have to be a leader. You're going to have to lead by example, right? You're going to have to be loyal yourself.
One of those will be good.
But I believe in those people, right? I believe in the group we put together, that movement. And if you're a super, super high performer in my company, but you're anti-culture, you're on the way out the door. Because that movement is that important. It's everything. I can't have somebody that's just because they're talented and they're super smart, that doesn't like anybody in the company, that doesn't want to play by the community rules, you know, be some odd man out superstar that we pay a bunch of money. I'd rather just not have them, right? And after that, last principle is just managing your products and services. I wholeheartedly believe that if you get that power behind that movement, that you let your heart show with your employees and vice versa, right? That you keep it exciting out there, that you let them take the lead, that you work that balancing act, this just happens, right? Everybody cares about the product. Everybody's managing the product. Everybody's, got their fingers on the pulse. You guys know what your product is. You know what you have to manage. But setting up those other principles before this will make this look like you know what you're doing. You guys, I really appreciate your time today. I hope you found it useful. I love the free conference call story. I would love to hear your stories. I'll be around if you guys want to talk to me or get a free conference call account. I'm shameless like that. I'm shameless. But really, really appreciate it. Thank you, guys.
Awesome. Thank you, David. Appreciate it. That's how it's done with no funding. Truly impressive. All right, the next panel is called How I Raised My First Million. And what's really incredible is all the entrepreneurs are immigrants, or at least not from here. Great stories, and I'm sure you'll enjoy. Nathan is our panelist. Ready? Nathan, our moderator, has a company called Founder Suite. Helps you manage your investor relations and everything you're doing as you're getting started. Yep, please. All right, rock and roll.
Cool. Are we on? Are we live? Perfect. Well, thanks for having us here. Really interesting panel, very diverse panel here in terms of fundraising background and history. I thought we'd start off just by going down the line, saying who we are, what our company does, and how much you've raised. I'll start. My name is Nathan Beckert. I run Founder Suite, which is the leading CRM for raising money. So if you're thinking about raising money, check it out, foundersuite.com. And we've raised just a little under $1 million. Please. Branko.
Hi, my name is Branko. I run a company called Immediately. Our latest product is called Gong, and we make intelligent, sexy software for salespeople to help them foster stronger relationships and ultimately close more business. We've raised about $2.5 million so far.
Hi, my name is Philipp. Our company is called Noah. We were called Locate before, so we just rebranded. Locate won TechCrunch Disrupt 2.5 years ago as a smart bike lock company, and we've evolved since then. And what we've actually now built is a software suite to help manage bike share fleets. So we effectively don't disrupt, but actually enable this industry, because we see there's a huge future in bikes in the transportation mix. We've now become an American company as well. I'm happy to talk about that if that's interesting later. And in terms of raising, we don't actually talk about how much we've raised, but it's several $1 million in seed. And yeah, currently not seeking money.
I'm Shaukat, Shamim. I have done a few companies, 6 to be exact. My latest company is YouPlus, and we create a platform for consumers to get things that they love for free. And all my combined companies have raised over 50 million. We exited companies for over 250. And this company we raised like a few multi-million dollars.
Awesome. Thanks, guys. So let's just kind of start from the beginning and talk about when you first started raising money. How do you get going, right? It seems obvious. You're reading every day in TechCrunch about companies that have raised lots of money, but it's not all that easy to get going. How did you first identify some investors and start the pitching process? Maybe just go down the line.
Yeah, I knew nothing Jon Snow when I started, and I think that's a common theme, is that you read in TechCrunch exactly somebody had a fantastic idea and built a prototype and raised $5 million. But what the story often doesn't say, or you don't notice, is that that person is on their third company, and they were able to attract that kind of capital based on completely different factors than that prototype, right? And so I went into it kind of like, oh, we have a great idea, and we have a great engineer, and so we should probably raise a couple $1 million because that's what it's going to take to build it out. But the reality was very different, and so I pitched a lot of Menlo Park kind of sandhill investors, only to be told that that's not at all where I should be spending my time and where I should be at.
You started pitching VCs first?
That's right, which is a terrible mistake. It was awful, much pain. And then finally I kind of realized that one of the most important lessons is to be pitching the type of investor whose thesis is aligned with first-time entrepreneur, the type of product that we're building, type of problem that we're solving. And then we started getting our first yes, but that took about 30 very painful meetings to learn.
And how did you identify, after churning and burning through Sand Hill Road, how did you start to identify these angels and others that were more of a fit?
Yeah, well, I don't know if it was the most efficient path to learning that lesson, but the amazing thing about Silicon Valley is that everybody tries to be as helpful as possible.
Sure.
And so people don't just tell you, oh, you're not a fit, go away. They tell you you're not a fit because, and you might be a better fit for these 3 people. And you kind of play this game of honing in on what a fit means and getting a better sense. And if you come in and I think you show the right type of humility and teachability and pattern recognition and people see the right type of dynamism and raw talent, they will gladly refer to their friends who might be a better fit. And so for me, the network growth was explosive on account of me making mistakes and meeting people who I was not at all ready for, but who were willing and happy to introduce me to more and more people.
So that time spent on Sand Hill Road wasn't necessarily time wasted. It opened other doors for you.
Yeah, it was time painfully spent and lessons that were extremely important and that then led to much smoother fundraising rounds later on.
Cool. Philipp, so you said you won TechCrunch Disrupt, so that obviously gave you kind of some instant visibility into, Silicon Valley investors. Did that generate some initial investors? And before we came on backstage, do you mind if I tell like a couple of the interesting investors that invested, like
Sure.
Li Ka-shing, China's richest man, or one of the top?
Yeah,
Something like that?
I believe so. Yeah, it's this fund, Horizon Ventures. Yeah, they've become pretty active investors in software companies. I think the first major investment that it was with actually Facebook. They put up the IPO money together with Microsoft and Excel, and from there on they've invested in a lot of other software companies. I think Skype, Spotify, Slack, Zoom are probably on their portfolio as well.
So 2 questions. So first, what did winning Disrupt do for your fundraising? And then second, how did you get in front of Li Ka-shing?
Well, we didn't get in front of him, so it's it's like with it's effectively the funds, right? So it's, and then the fund managers. I think our experience is probably very different to most other startup companies, and still I wouldn't say easier, just different in the sense that when you do win an award, then investors come to you. So I think the difficulty was more actually in deciding whom to work with, and then of course. VCs are masters in negotiation. They've done this all of their lives, and they're very good at making deals. And figuring out actually what are the right terms. I think that was the most complicated part for all of us in the team. Especially when you think about things like, I studied law, but I'm not a lawyer, and this is a long time ago for me as well. And I certainly didn't study financial law and like liquidation preferences, those kind of things. So I think understanding what the right terms are, long-term in particular, right? I think it's very important to distance yourself from the money that you're being offered and really thinking, well, what makes sense in the long run for the company. And I guess also it stops you from actually potentially looking out for more options, right? Because you have some initial really good offers, and then you go with those, right? Because you do know that you need money to obviously get the business forward in the first place. So I'd say in that sense our experience has been different, that investors have come to us. What I did do though early on, I understood that it was super important to get into the US market as well and get to know US VCs. So like David saw backstage, I hadn't seen him in a year and a half. Even when we weren't looking for money, I just started traveling here to get to know VCs. Because ultimately you work with people. You don't work with a fund, you don't work with a brand, and there has to be chemistry because you're going to be working for many years.
Sure.
And so what we did do is actually build relationships with VCs here, and some of them have become advisors, some of them have become shareholders now as well. And I think that's been super valuable because they, like you said, are so helpful here. And that's a huge difference to European VCs who they don't share as much knowledge, put it that way, and they're not as helpful. And here you find even some VCs literally just supporting you even without an interest to actually invest in you, that you might even not be a fit, but they'll be very helpful in telling you who you should work with and what you should look out for. And I think that's been super helpful in the process. And that's really invaluable too, because that's effectively getting very expensive advice for free, or very valuable advice for free, I'd say.
Yeah, for sure. Good. I want to come back to your crossing the pond and relocating here, because I think that's interesting. A lot of folks in the audience are from outside the U.S. and wanting to raise money here. So table that. But Shaukat, let's talk about your. You've done a couple companies, so you're not, first-time entrepreneur. Did you already have the Rolodex of investors? How did you get going on your round?
For me, I would say my thesis is all the things you hear about fundraising, they're all wrong. you will have your own story about fundraising. I was fortunate. I was in Yahoo from very early on, and then I became a venture capitalist in a pretty large fund. Had a massive return from as a partner. So lots of VCs knew about me. And then I decided to start a company. I raised my first seed money when people didn't even know what a seed is. I wrote the first convertible note. It's all favorable to us. And a bunch of Sand Hill Road VCs gave me money. Me, myself, and a 9-point PowerPoint slide. And that happened, we thought like, man, we rule the world. Must be doing something interesting. Turned out to be, that wasn't it. Then in the company I did it next, I said, let's follow the same route. And I was fortunate at that time too, because my other company, we did really well. So we raised money again from Sand Hill Road VCs. We talked to 2, we got 2. So we said, wow, this must be the rule that everybody follows. Then in that company, we raised a lot of money, and not every company's history is the same. So we had to kind of hustle for it. Then I did another company, which I said, you know what, I'm gonna just raise from individuals and very well-known people. So I did that, and I failed on that in that company.
That's a company prior to
YouPlus. That's right. There also we raised few $1 million. And when it came to this thing, it was like you had you hear all the stories, people are getting funded, before they have all kinds of stuff. And I look back at my life as I had done that, but I don't know whether I can do that again. And it seems like market has changed. So I didn't know what the formula is at that particular time when we were raising money. So I said, let's see whether I can do something very differently. And this time, I wanted to go after the most critical and the most value-added investor, although chances are 90% they will say no to you. I said, let's get their money first. If I do get that, then we will raise the company. So it took us a little while to do that because, many of these guys, they're hidden. They're extremely high profile. They founded things like SoftBank of the world. But it kind of, so the experience was very different. But it took us longer, but we finally got there.
Okay, got it. So our time is already short, so we're going to cut right to some advice for folks in the audience. If you could, I like this kind of rewind question. If you could rewind and give your younger self advice when you were first starting on that round, what would it be? Would it be to skip the Sand Hill Road? What would you tell yourself to either do better or avoid?
Yeah, I think make drinking buddies with a couple of VCs, not to get preferential treatment, but to be able to empathize with them, to be able to get into their head. I think a lot of young entrepreneurs have this sense of, my idea has to be really cool, and then I have to present it in a really cool way, and then I'm going to get funded. But it's not a black box like that. That's not all that goes in. It's what's important is understanding what's on the other side. There's limited partner dynamics, and there's fund theses, and there's a fund size, and that has to yield a certain return. And the investor is thinking all those things. The investor is thinking, am I going to get in trouble if this investment goes poorly? Is he going to look bad on me? And so you have to realize what motivates investors, and it has a lot to do with fear and greed and limited partner dynamics, and it has a lot to do with how big the fund is. It has a lot to do with whether they're more comfortable going for 5x returns or whether they're more comfortable exposing themselves to a much higher risk profile and going for the 150, 100x. And that all goes into the pitch. Am I pitching a post-B exit story, or do I know that this company has to go public in order for it to even fit the bill for this investment firm? And it took me a year and a half to learn that, and that was when I was able to go and raise a $2 million round in a couple weeks. because I knew exactly which investors to pitch and how to pitch them. And I was able to sit across the table and speak in the same language. I was not telling them what was important to me, which is what entrepreneurs do, and that's a mistake. The investor cares about what's important to them, and there tends to be not that much overlap between what excites you about your company and what makes it a viable investment for a VC.
Good advice. That's so point on. Make drinking buddies with these guys, get inside their head, tweak your pitch to match that. Really good. Philipp, little advice for your younger self, and if you want to tie in the international crossing the pond question, that'd be cool.
Well, I'd actually say, true to what we've actually done, I think stick to your guns, make sure that you communicate your vision really well, and because as you say, well, VCs sometimes don't care about the same thing as you do, but I think it's really, really important that you make sure you protect your business, because at the end of the day, we don't do this for financial interest alone. I mean, if we did that, we could do a lot of other jobs. It's really grueling to be an entrepreneur, and to work in a startup environment is super, super tough. And you want people who are along for the ride to really help you protect your vision as well. So I think that is super important. So I would say look beyond the money at all times, because there's a lot of people who can give you money. If you're onto something good, there will always be people who give you money, and there's always a fit as well. So I think it's really, that's the key thing, like relax. You will get money if you're doing something right. If you listen, you will hear what you need to fix to make your business model fit with your vision. And I think that's really key. And your question with regards to the US, this is still the best place on earth to start a company. Because of, not just because of the capital and because of the investors on Sandal Road, but this country is amazing in embracing new product. And that is kind of key. And I think if you can make it here, you can build a product for the American market. You can also then take it to the rest of the world. And I think that's super helpful here. So you've got really amazing embraces of new products. And and I think a lot of understanding for new businesses. So I'd definitely come here again, I wish I'd done it sooner. That's my advice to my younger self. So I wish I'd come here sooner,
That's good. Good feedback. Shaukat, any?
I would say worry less about pitching to VCs, because you should worry more about what you're pitching than who you're pitching to. Regardless of what you do, there will be people who will say no to you, and sometimes, as an entrepreneur's instinct is when somebody said no to you, you kind of hedge, you kind of go around it, you become a salesperson, and it won't make a difference much. I usually like people when they tell me no, and there is a good reason behind it, and live with the fact that people will say no to you. Other advice I will give to you is just learn the fact that the value-added investor, the myth that we have in our mind, that people will, all of a sudden an investor will come in and your life will be so much different, better. It's a complete bogus concept. You make the company, investors don't. The good investors will stay out of your way and give you help. And as an entrepreneur, there are only a few help that is meaningful to you. Actually, if you ask me, I would say only one help that is meaningful to you as an entrepreneur. Take my funding risk away. Everything else, if your investor know more about your business, you're in trouble. You're not going to make it anyway. But that's the only risk that they can take away from you, which is your future funding risk. And I would say only probably 10 VCs I can think of, 10 firms, can legitimately claim that they can take your future funding risk away. Everybody else is, you got to look at it, the chemistry is important, but as long as they're not destructive, people are not drinking from their own Kool-Aid, you have to kind of deal with it.
So as informed, we actually do have a little bit more time, so we'll keep going. And if there are any questions from the audience, we might have a few minutes for that. Maybe one question I'm always intrigued by: you hear the different streams of advice. Do you conduct a laser-targeted fundraise where I want these 6 guys or nothing, or do you go for a numbers game where you talk to every investor out there and from that wide, drag net, you pick a few? And for Founders Week, I had to talk to a lot of investors. It was a numbers game for sure. I think I talked to like 200 investors to get to our 11 we ended up with. I don't know, laser focused versus dragnet.
I did a lot of the dragnet, and it was rich in learnings, but I wouldn't say it's the right move. And the more time I've spent and the more money I've raised, I go for more and more focused. And I think not just in terms of the investors, but almost mainly in terms of timing. A big mistake that I made and that people make is go and fundraise too early. It's like, well, we have 6 months of runway, we have some early proof points, I hope that I can trick somebody into giving us money right now. And it's better to go out when it's almost too late, when you feel like, well, these people would be stupid not to invest now. It's so obvious, and I can be like Jack Dorsey and make a deck that says the 100 reasons why you will not invest in Square, so that I can answer all of your objections right away.
I like that.
And know that I'm prepared to field every single question. And so almost, I think, be focused. It helps to go out too late with too many proof points, and then go out to the right people, do your research, and have relationships established with them. You know, I think do the wide net for building relationships and for learning, for getting feedback. But then don't go pitching 25 partnerships. Go pitching 3 to 5.
Cool. Good. We'll jump around. Shaukat, any comments on that?
You know, the realistic thing is it all depends on what stage you're in, what your idea is, and what are the options that are available to you at that point. We all want to, you know, who doesn't want that, right? Who doesn't want to have that Jack Dorsey thing? You want to have leverage. But the fact of the matter is, very few startups, probably 1 in a million, will have that kind of leverage, and we will hear stories about it, and we'll say, maybe I'm the next one. But just statistically, you are probably not. So, you know, I've done both. You know, at Rhythm, I picked 6 VCs, we got 6 term sheets. The other one, we said, maybe this one will be the same. We pitched first 2 and we got a slap on our face. And I said, wow, we need to do something else. It all depends on that. Don't be too disheartened by that. If you're lucky enough where you're talking to the one that you want and they're saying, yay, go for it, right? If not, widen the net, but do it fast. Only thing that money raising and venture community does not like is a stale deal. So you don't want to be perceived as you are failing.
Yeah, good.
I think I already answered it from our perspective. Definitely focus, especially also the stage, you know, of course, that you're in. I guess if you just have an idea and you don't have a business yet, then you probably do, and you don't have any outside interest. Sure, you have to go and create it yourself and speak to a lot of people. But otherwise, as in generally, of course, you have to be focused and really find out who is a fit. So that's general advice. But I think in our case, I already explained the experience was slightly different. But for sure, it depends so much. I think what both here on the panel already said is pretty much true with regards to that.
Cool. I think we're out of time. So we appreciate it. Can we have a round of applause for these guys? Very good. All right. Thanks, guys.
Thank you.
Well done. Well done. Thank you. Good job. Oh, I'm sorry.
No, we're staying.
Do we have time for Q&A? Yes, we do. Okay, sorry. Let's have a few questions from the audience. Come on back. I can't see if...
Tipped off for a friendly question.
Hi, what would you say like some of the factors that would turn a campaign into how could a program go viral from your experience?
Can you repeat the question one more time?
If you have observed some parameters that could lead a program or a campaign to go viral.
A funding campaign?
Funding campaign, a program, whatnot.
And by go viral, do you mean just pick up a lot of momentum and
traction and attraction and what and so on and so forth?
Anyone want to tackle that?
If we had that answer, like everybody will be done, right? there is no real formula behind it. Again, it depends on, it really depends on your leverage. I mean, early stage, if you're just starting a company, seed stage, you really have only a couple of leverages that you can really play, right? You can either play your team, or you can, play the idea. But, people don't put too much onto that, idea in the early stage because, ideas fail. So you really don't have a leverage point. So unless you're a celebrity and somewhat perceived as a celebrity, like things really don't go viral that way, right? So, don't worry too much about being viral. It's not a PR thing. It's you want to get money and get your business going.
You don't need to be viral to be successful. There's time to be viral, and there's a lot of nonsense puppy viral videos that don't raise money. It focus on value.
Good. We have another question.
I have a question. What I don't see here is a female, and that's, I think, the elephant in the room, right? What do female founders go through for early stage? And that's sort of the question maybe for the startup conference or a panel here.
Sure. Do you guys think there is a strong, medium, or non-existent bias for or against females raising money? Have you experienced it? I've worked with a couple. Before it started Founder Suite, I was consulting the startups and worked with a few female founders, and they raised money. It wasn't an issue if you had traction, good idea, and product. So from that limited experience, I didn't see as much bias as that you might read about in TechCrunch or Pando Daily. But have you guys experienced this? What do you think? What's your opinion?
To the contrary, I'd say you actually have a very good competitive advantage since most VCs are still male. They'd much rather have a meeting with a female than with a male. I'm not saying that in a sexist way, but seriously, it's I think I was raised by women. I didn't grow up with my father, and I know very strong women in my life. And for example, our lawyer also, who represents us as a female, she started out at Wilson Sonsini and is, I think, one of the best lawyers in the Valley, and she's a woman. I think she is a perfect example of how to use certain things as an advantage in your career. And I think it's just generally still the case that technology, most of our engineers happen to be men. I'd love to have more female engineers in the team, but we don't find them. It's not that we've got over 20 engineers now in the company, and it's not that we say like only males apply, but there is no female applicants for electronic engineers, so that's still lacking. And a lot of founders happen to be engineers still, at least if you look in tech. But I think anything that is, I think all the possibilities are open. I'd say there's definitely nothing against women as a bias. I think people actually welcome women, and they stand out more when they do something.
Good point.
So
use it to your advantage, right?
Yeah, I would say so. Yeah.
Interesting.
I would say if a VC is funding you because you're male or female, you probably should think twice about it.
That's true.
Because it's not a charity thing. It is not a debate. It's actually a focus on building a business. And in that business, nobody really cares about who is making the decision if you're not in front of them. So anybody who is saying I'm going to fund or not going to fund, if a male, female, whoever that is in front of you, that's just ridiculously silly.
Yeah. Any final thoughts? I think we're
50-50 on our team. We've been lucky. We're exact same number of men and women. I have some badass female founder friends, and I think it's a bummer there's not a woman up here. That's probably an oversight. And I would certainly just reiterate, if you ever get in a room with a VC and you feel that your gender plays a role, just walk out of that room as soon as you can, and go into a room where somebody's interested in your value proposition and your proof points. This is the only thing that should matter.
Yeah, no, I think that's good. All right, well done. Thanks, guys. Very good.
Quick question. What happens if the story is not a success? what happens with your relationship with your investors, and what would be next? Because
if the
they
story,
took our risks.
Sorry, start the first part. What happens if your story goes sideways? Was that the? Oh, that's good.
As in the company doesn't work out. That I have about 60 investors on my cap table, and all of them I'm on texting terms with, and I think that's important to have a personal relationship with every single one of them, and they know that I have done everything in my power to make the company happen, and we have that relationship of trust, and so I think it's an important role of the partnership between a founder and a VC to know, for the founder to feel like the one thing they don't have to worry about is disappointing their VCs if the company fails. They have to worry about making it not fail and not having perverse incentives driven by fear. And so with my investors, I know that I am just going to do anything I can to make the company a success. And if it's not in the end, they're not going to be disappointed. They're going to know that that was the case. And that is an empowering feeling. That lets me not optimize for small success, but for the opportunity at a big success. And so they shouldn't blame you for failing if you've done your best.
But I would say the fact of the matter is, if you, unless they are VCs, they are, even their seed funds or anything, they are probably not going to talk to you for a while. It's okay though, but companies do fail, and this is a high risk capital that they're giving you. But don't expect them to come around and give you money right away. Like they may give you money like later if you do more companies, but they will be a little upset with you for a while, and it's reasonable, right?
Yeah, I think I can echo that just from founder friends, also having seen businesses that didn't do so well. I think what's key is just having a very open relationship with your investors, so if you do fail, it doesn't come as a surprise, and it's not really failure. I think the best value that, you mentioned before that you find that there's a limit to the value add. I think that really also really depends on the type of investor that you have and that you've chosen to work with. We've only got 4, so it's a small group, and on the board there's only 3 people. And we don't have formal board calls to discuss stuff, and I definitely discuss with them not the stuff that's going right, but always the challenges, because that's where I can tap into their wealth of knowledge, and they'll reach out within their group of people who can help you. So I think that's just the most important thing, is that you just basically never have them be surprised by what could be perceived as bad news, and actually involve them. They're 10 times more experienced and smarter in most cases than you are in certain areas where you need support, and they have a great network. So I think the ones that get into trouble are the ones that have been dishonest, have been hiding facts, or simply haven't shared information. Because a lot of times I think failure is actually preventable simply by sharing, I think, what's going on a lot more and asking more for advice, because there's a lot of people out there who can help you if you ask for help.
Yeah, I think it's always the ones that come as a surprise that leave the black mark on the founders, right? If you've been communicative, it's usually accepted. So, good. Are we done now? All right.
We'd love to stay, but I think it's just a time limit, really.
I think that gentleman.
If I may ask one more question, just about the team, the process, or some of the key points of building the team around you.
Okay, let's just take this quick. Building the team. A post-funded, should we assume it's a post-funded question? Pre, okay. Building a team, pre-funding.
I think in that case, it has to be somebody, the biggest rule of thumb, of course, aside from core competency. If I need a technical co-founder, they better be able to code. But the number one determining factor of people that have worked out and haven't worked out for me has been, can I talk to them the same way that I would talk to my sister when I'm giving them feedback? Just very, very, very honest, without any frills attached. Don't give them the feedback burger of, you're doing this right and this is fantastic, but this is kind of shitty. You have to be able to give them the unfiltered you, and it works, and you're on the same frequency, because there just will be constant friction otherwise.
Yeah, I'd say that's good general advice. Pre-funding is tricky, of course, because your team's not going to be big pre-funding. But I'd also definitely say focus on the character and the integrity of the people you're going to work with. They should be very different to you. They should be strong where you have blind spots. And you should definitely talk more about their weaknesses and your weaknesses with them. show your warts, I think is one way of saying it, and effectively making sure you share the same values, because yes, it does get tough. Time is up. So we hear you, we read you. So I'd say that's definitely the advice.
I would quickly say, look, most of the people will tell you, not everybody will tell you, build a great team. Can you point me to one person who says build an average team? That's silly, right? So one other person who I'm very fortunate with having an investor is Reid Hoffman. He used this word many times to me and said, as a startup and independent at any stage, the most important thing is speed, and expect that you're living in a world of imperfection. So if you're doing that, you're playing the game perfectly. That means is sometimes you just have to go with it, right? The world is not going to be a perfect thing for you, and you have to have enough belief in you that when things turn imperfect, you will hustle and you will do it again. That's more normal in my opinion.
Awesome. All right. One more round of applause for these guys. Thank you.
If you haven't checked out YouPlus, one of the things I noticed right away was amazing UI. They've got this button on the bottom that's phenomenal. All right, so about 7 years ago, I was at Founder Institute, and I'd go to a bunch of conferences, and I'd run into this little guy that said Brian Wong on his business card, formerly at Dig. I don't know, we just became friends, and one day he comes up to me, he's like, dude, I gotta raise money. I've built this thing. I'm like, okay. And he'll do his little thing. So back then he didn't have a license, so I remember picking him up at the Caltrain station and taking him to investor meetings. Brian Wong is one of the coolest guys I know, super smart. Come on down, Brian. All right, welcome.
How's it going?
Thanks for making time for us here.
Good morning, everybody.
Yeah, let's get up. Come on.
Energy. Yeah. All right.
All right. So Brian, tell us a little bit about your little thing that you used to do. You still do it?
The Bangra thing, or what?
No, you said you wanted to create something and evoke an emotion in people, and you used to do this thing with your hand. Remember that?
Maybe I've gotten a little old, but I don't remember.
You're
Sorry.
Yeah. So when you were pitching Kiip originally, the original pitch was that there's a moment in which people have this emotion, and if you reward them, it gets them to like you more.
Absolutely.
So tell us a story about Kiip and what you guys are up to, and what's new and good. And
yeah. So I mean, the company is now almost 6 years old. So I think in startup world, that is like either you're not supposed to be around or you're really old. And I guess what that indicated for us, and by the way, as a company, we're now profitable, we're close to 100 employees, we're going to do 20 million in revenue this year. Like, there's things that happened over the last 6 years that I never expected would actually happen. But as a business, what I'm so happy about is that our core vision has remained intact. And that is the notion that in these moments of happiness, in these moments when we're on our phones and doing these things that have meaning. So for example, you just finished a run, happens to be your best record, your personal record. That's a great moment, right? You leveled up in a game, that's a great moment. And unfortunately, in the past, in these moments in time, there was a lot of annoying advertising. And it still very much so is the case. And so he said, what could we do with these moments instead of just putting an ad? Why not actually reward you? And so we decided to bring rewards in a very unique way to these things that you're already doing. So today, we're now integrated into 4,000 apps. Apps you may have heard of like Runkeeper, Mint, All Recipes, eHow. And we want to take these things that mean things, moments in time that mean something to people, and create a better experience. There's never, advertisers have always been there to take your attention and kind of remove you from an experience to get you to do something else. We said, why not in that moment actually add to it? How novel is that, right? Like for a brand to add to your experience is like, that's supposed to be groundbreaking. And so that ended up being the model. And so in one line, we kind of describe it very simply. It's, historically with brands and advertising, they would say, hey, I want to find someone who's interested in fitness. So I'm going to go ahead and buy an ad in, Shape magazine or Men's Health. And their theory is, okay, if you're reading fitness content, then most likely you're a fitness enthusiast or you're interested in fitness. And then we ask the question, why not be there the moment someone has just finished running? I mean, that's a lot more direct. It makes a lot more sense. And that, in many ways, has just kind of, in a nugget, explained what we've been doing for the past 6 years.
That's awesome. Mike?
Yeah, there we go. You're good.
Can you hear me? So in these 6 years, going from, hey, I built this cool thing to raising $20-something million, any lessons you've learned? I mean, I'm glad that your vision is still the same, but would you have done anything different?
Yeah, I mean, so a lot of folks, you can imagine, are curious in retrospect, what would we have done differently? I would say there's really nothing I would want to change in the path that we took. I think in our current environment and the things that we were doing at the time was the appropriate action. I would say the lessons learned, right, are pretty much around people and around market dynamics. So I'll quickly break those down. In people, it's very simple. I look like I'm 12. I'm fully aware of that. And it's pretty much impossible for me to go into a room and be like, hey, yeah, I know, I'm the experienced one. It just isn't going to happen, right? So I play the whole role of I'm the one who's learning. I'm the one who's, as a CEO, I'm supposed to not dictate to you as a team, but rather enable you, remove obstacles, be the one who offers resources. You do need more people, things like that. And if you happen to hire the right folks, they'll be autonomous enough to take on that directive with resources only and be able to chart their own path. However, you are responsible to set the vision, right? One thing I learned about people as well is in the very early stages, you're very good at bringing on generalists and intrapreneurial folks, very excitable, want to do all sorts of things. And by the way, very appropriately, because you want people to be comfortable with ambiguity. One day you're doing one thing, one day you're doing another. In the later stages, it's a lot more apt to bring in specialists and folks that are really good at being that sharp knife and just cutting, and more efficiently and more intelligently. And what happens, though, is there's a point in that middle where there is a little bit of an exodus or a sort of a turnover period where a lot of these generalists get replaced by the specialists. It's not something that you do as an evil person, but because, to be honest, what happens is the generalists feel like they are being punished by being specialized. Because at some point you have to say, listen, we have to be really good at customer retention, right? And then the generalists will go, well, I was doing all this other stuff. I'm like a free bird, and why am I now doing that? And then naturally, these folks will turn over themselves, and then you'll bring in that specialist. So that was the other data point I learned on the people side. Many more lessons to learn, I'm sure. And the other thing is market dynamics. So some of you may know, but in our industry, which loosely is defined as ad tech, just please know that I don't necessarily view us as that, but from a later stage standpoint, when you look at the market, there's companies that are in that category that sort of look like-ish to us. Cool. But what happens is, in the last couple years, our fellow brothers and sisters as companies in that category have cratered in their valuations, in their multiples, all that. And so when you think about it, you have an environment that's largely unfavorable to the thing you're doing, but internally, everything's awesome and exciting. So you can imagine the challenges that come with that. But even within 6 short years, there's already a few cycles, right? And that within your own industry, right? From the ad mob excitement to the millennial IPO to the no one gives a fuck anymore, right? So it's really interesting to see those data points along that path. But then making sure that when you're with your team, it's about windshield versus rear view mirror, right? If I could be more cheesy about it. And you know that if you're determined, the vision is very clear, that there's still a problem that needs to be solved, which is there's not a single normal human being that looks at a banner ad on their phone and goes, ooh, let me intentionally tap on that. That's never happened, right? And because that is still a problem, there still needs to be a solution. I don't care about market dynamics. I care about solving that, and we will continue to do that.
So speaking of that, what's the coolest reward you've given?
I mean, every time, we have a lot of really cool rewards. Actually, it's everything from free product that you can redeem. Like we did a smart water campaign where you could redeem a free smart water at a nearby Walgreens. We actually shipped out an early preview of this new Sour Patch Kids product called Lineups, which is essentially Sour Patch Kids that were connected to each other, and we actually sent those samples. We did a thing, and you're gonna love this. We did a thing that was weather triggered around Slurpee. And it's about to come up, right? So when the weather got hot in your city, I think if it went past like 70 degrees, 7-Eleven would trigger a Slurpee reward. So there's a lot of really cool stuff that we see. And there's stuff that may not seemingly be cool, but has somehow become really cool, which is we actually do this thing with Home Depot, where you're wondering, what would you give away from Home Depot? Like free lumber or paint or like nails? I'm like, that's really sexy, right? But what we did with them is they have these workshops. So if you're like a huge Home Depot junkie, which I'm not because I'm really bad at building stuff with my hands, is they have these free workshops that can teach you how to like build a shelf or like whatever. And we went into to-do list apps. And when you were like getting things done, like in a to-do mindset, they rewarded you with an invitation to this workshop. So the workshop was already free, by the way, but people didn't know that that was a perk. So there's a lot of things we've learned in the past few years, that things that may not necessarily seem like big value, huge rewards, are actually appealing to people.
What's next?
Well, it's still Kiip. 100
within Kiip.
Within Kiip, yeah. What's next is really it's super exciting. So I don't want to just say connected devices. Like how your eyes just roll to the back of your head is like really fast, because like everyone says, oh, connected devices and VR are cool. But let me explain tactically what we're doing here. So our whole currency is the moment, right? Things that happen in that moment in time. Doesn't really sound like that's just exclusive to a single type of device, does it? So we started to look at the world of connected devices and realize, oh, like these connected devices have these moments as well. So think about your car when you have that moment where you're like, oh, I'm about to run out of gas. That's a moment, by the way, that your connected car can now respond to in real time. And so we've actually now been powering connected car rewards around, for example, here's a free gas card. You might be running low on fuel yourself. Here's a concession reward, so you can get a bag of chips or whatever it is. So these things are super now relevant, but tied to anything that's connected. So we call it now the connected moments category, where anything, imagine your fridge in the future, not even the future, even now, your fridge can detect if your vegetables are going to go rotten. In that moment, Whole Foods should be there, right? So we're seeing so many more opportunities now from that whole pool of connected moments.
Will I ever get a reward for doing laundry?
Yeah, so 100%.
I just saw a company, Foldamate, helps you fold laundry. Most amazing thing
Wow.
I've ever heard in my life.
Wow.
Order one.
That is the most Silicon Valley thing I've ever heard.
Right? Really cool, right?
Yeah, sort of.
I think it's awesome.
Yeah.
I hate folding laundry. Okay, so we were at Coachella a couple weeks ago. And
Humble brag, Nima.
You and I, it was epic. Guns N' Roses was cool. So we were talking about, and I started a conversation with what's the next $1 trillion market. And so my question is, hypothetically speaking, if Kiip wasn't there, or you weren't working on it, or it crashed and burned,
Sure.
what would you be working on right now?
Well, $1 trillion opportunities, we discussed this. There's two that I'm really fascinated by. Actually, three. I'll quickly go through them. The first is space. Second is redefining business as an entity. Actually, I'll just skip the third for now because I don't think we have a lot of time. So the first is space. I mean, it's very logical, but I think a lot of it is everything from, as crazy as it sounds, mining asteroids and the moon, to just getting shit out there, to in things like a suborbital travel that allows people to get to places really fast. And, these things will generate, so many more opportunities. We're simply scratching the surface. And I think and space is so interesting. I kind of categorize it as domains that are unknown. So, for example, deep sea is also, in my opinion, like space. It is space in that it's a lot of space, but a category that we have barely tackled. I met a woman a few weeks ago who's working on underwater autonomous drones, right? That can go deep sea and go to places where, humans and whatever can't do. And these types of things are just opportunities that I get super excited about. redefining business is really interesting. Like a friend of mine wrote a book recently called The Liquid Enterprise. And what he was essentially saying in this book was that, whether it be the Ubers or the Airbnbs or whatever, like you're starting to see almost a redefinition of the structure of the business as an entity. I'm talking when you're incorporating, when you have employees, assets mean a whole new thing when you don't even have assets anymore. Assets could even become liabilities like that. And so now you have this questioning of not just the fact that sharing economy might usurp the big juggernauts, like the fact that Airbnb came out of nowhere, sort of, and then, Marriott and Hilton are shaking in their shoes, but it's really the fact that the whole entity of how you structure the business has to change. Employees, these massive lawsuits that are going on about what is an employee, these things are decisions that I'm excited to see, which leads to a lot of opportunity. Because now when you think about how to change how a business is actually structured, that alone, because the business entity itself has created trillions upon trillions of dollars of value over the last however many years, when that changes, the next path is going to have another multi-trillion-dollar opportunity as well. And I know I'm being vague about it, but this is everything that goes down from the regulation to the legal structure and framework to looking even at other countries and how they're doing it.
We also talked about ownership, right?
Yeah.
It's not. What did you say? It's not sexy to own a car anymore.
Yeah. Well, yeah. So exactly. Like I was just thinking the other day. It's like I happen to have a car. I feel like a loser driving it around. How many of you guys have driven somewhere and someone comes up to your window thinking you're their Uber driver? And I'm like, fuck, right? Like that feels really depressing.
Do you drive a Prius?
No, I don't drive a Prius. But and if I don't imagine, I feel bad for those driving a Prius because that's even worse, right? They're like. And then especially if it's late at night, someone's like, are you an Uber driver? Like, take me home. Oh, you're like, fuck, yeah.
You should do one of those.
Yeah, exactly.
Where the Lyft, Jerry Rice was driving the Lyft.
Probably, yeah. I don't know, yeah.
Okay, so, you're 25 now, and I'm sure you've seen some pretty crazy stuff. One of the things I've always kind of liked and respect about you is you've got balls. And you walk into a place, like you said, you're kind of the underdog because you look like you're 12. And so from all this, I'm assuming that's where the idea of the book came, the cheat code. So tell us a little bit about the book. I got a chapter that I'm going to send out to you guys. It's called Find Your Superhero. Yeah.
Superpower.
Superpower, yes. So you got to find your ninja skill. But tell us about the book.
So I figured it'd be really relevant to share it with this audience because a lot of us are builders, ideators. We just want to create stuff. And so, and you're probably wondering, right, you have a company and everything, why are you writing a book? And by the way, you're in Silicon Valley. Do you realize no one reads physical books type of thing? And I'm like, okay, put that aside. The idea of codifying some of the things that are floating around in my head I thought was interesting, and I decided to take a little leap. So the book is called The Cheat Code, and the premise of it is that in games you have cheat codes to get ahead, right? And then in life, there are cheat codes. So it's a 71 life cheat codes. And it's actually kind of self-filtering because if you don't know what a cheat code is, you probably shouldn't be reading this book. So it's actually really designed for a group of folks that have been exposed to the video game generation, know about the fact that cheat codes exist. Anyway, so the thing about cheat codes, too, is that they are very reminiscent of life hacks. However, I find life hacks, and I don't know if you feel the same way, more entertaining than practical, right? And you kind of have the whole Tim Ferriss thing going on. You're like, well, I guess Tim can do it because he's awesome and buff and ridiculously cool. I don't know if I could learn Tango in 5 days. And so I'm like, okay, let's do practical cheats that apply to bringing ideas from imagination to reality. And then also how you look at yourself. The whole package of a startup in the beginning is you as well. And so there's things about personal branding and whatnot. So one of the cheats that you guys will all see is about finding your superpower. And the premise of it is, as a cheat, is very simple. There's a point in your life, in your adulthood, where you stop focusing on fixing your weaknesses and focus on honing in on your strengths and sharpening those strengths, right? And for me, I know, as much as it looks like it, I'm terrible at math. And I know that I'm really good at getting people super excited about stuff, right? That's literally all I do. And so that became the strength that I was like, okay, that's my superpower. And that will be my MO for everything that I do, from investors to potential investors to employees to potential employees to customers to potential customers. It's all about using that.
To see talking about it.
Yeah, I'm like, just get excited. This is exciting shit, right? It's just like, let's figure out how to energize people and make it feel like all the mental barriers that you put up, just floats away. So another thing that is in there is literally stop over coffeeing. What does that mean? Not stop drinking so much coffee. But I think a lot of you have experienced this where I'll get a lot of people who might email me, every other day, or they're like, Brian, I want to grab coffee with you. I want to pick your brain about this startup idea. I'm like, the time you're going to spend grabbing coffee with me is time you should be building shit, right? And the thing is, people try to build too much data in their head about, I need advice on this and that, and then it'll make me feel more comfortable. It's more therapeutic, right? They're using me as a therapy session rather than actually building their shit. So it's like, stop using other people as therapy sessions and go build it. You're building it as therapy, right? Getting your hands dirty is therapy. Asking people for data points is not going to help you. So those are just a few of them, and I think it's really interesting, just from the book aside, this has never been a better opportunity for you to build, and we're the most enabled generation, and I'll leave with this because I don't think we have a lot of time left, which is, my mom and dad immigrated from Hong Kong. They took on jobs. My mom is a nurse. My dad is an accountant. I asked them why they chose to take those jobs because, to be honest, those are very stable, seemingly, boring type of jobs. And so they're like, that's the reason why we took them. Because we wanted to be stable so that you could grow up in a stable environment. And so I'm like, and then I asked the question, like, did your parents take on these jobs and immigrate here to have a stable environment for you to grow up in, for you to go ahead and then take on another stable job and be a lawyer and be boring again? No offense to lawyers, I'm sorry. No, the answer is no. They did that so that you go out and do crazy shit. Right? And so, yes. And so that's the whole point of this book is like, go out and do crazy shit. And one of the other cheats is, and I'm trying to give away the entire book, but is ask yourself, what's the worst that could happen? And that's a very tactical tip and cheat for you to use when you're assessing risk because, okay, the worst that could happen is, you end up going back home and you move back in your parents' place and you get to sleep in your own bed again and you get laundry done for you and you get food cooked for you. That's the worst that could happen? Then why aren't you doing it? Right? So that's sort of, the way that I want to frame this thinking. And I think we are so fortunate to be in this environment. And I'm excited to see what all of you get to build.
Awesome. Do we want to do a couple questions for Brian? Do we have time? Microphones?
We have 1 minute,
1 minute
to do.
Who has a question? Yell
one
it
question.
Out.
What your question is how to... Oh, I see. %. We reach out to specialists in those industries all the time, and keep in mind a lot of the things that I'm mentioning, there's certain things that have to happen from like reality standpoint when it comes to like health, when it comes to education. There's things you just can't fuck with, right? So I totally understand. And I think, for example, we've actually integrated our technology into a few apps that university researchers are using for adherence, for example, which is the term for do you take your drugs all the time and on time. And rewarding people for doing that. And that's been one of the areas that we would reach out to someone like you to understand more. So I wouldn't discount specialized knowledge. And I would actually recognize, though, and this is more of a Gary Vee quote, that there's always going to be someone who's going to be trying to disrupt themselves or putting themselves out of business. And I think there's certain aspects of these categories that we've been so used to a certain way of doing things. And we have to actually look at the symptoms of what is typically a larger problem. I'm not going to tackle the entire medical industry as a whole. But for example, one of the aspects that's been brought up is it's very reactive. It's very, okay, we'll prescribe, we'll react once some symptoms have occurred, but preempting these things and preventing these things is very key. And that alone as an insight can build so many more businesses out of it. Like even genomic sequencing has something to do with that, because then we know what potential diseases we may be prone to so that we can prevent those in the first place. But I think those of you who are in those categories, fear not, there's a lot of opportunity, and in fact even more, and leverage what you have rather than trying to move to some other industry just because it seems sexy.
It's funny, my mom's a nurse too. Hi Mom. She always gives me like funny ideas about nurses and cool tech. She even knew who Brian Wong was today. That's kind of cool.
Well, really quickly, the thing about nurses too is that you have things as skills that apply that you can leverage when you go into tech or do something in tech, right? And just random thing, like it's because of my mom that I learned how to speed walk, by the way, because she was an ER nurse, and you can't run. you have to walk really fucking fast. So my mom will always walk, and I'm shorter, right? And as a little kid, I'm like, ah, and it's like, that's how I learned how to walk really fast. So now people try to walk with me, dude, why you walk so fast? Because my mom taught me how to. Yeah.
All right, one more question, and then we've got to cut this thing off. One more question. All right, here we go. In the front.
So I think it's the Tinderization for everything. So essentially, I have this vision of doing like sorting my email via, it's really lame as an idea, but it's sorting my email like a Tinder fashion, like very binary. I think that UI, that UX is very valuable as a mobile first way to interact with content. So I would love to just be like, swipe here to send to someone or forward to someone, swipe this to archive, all this stuff. For some reason, there's an app called iTriage that was built for this, but it kind of blows and it hasn't been updated for 3 years. I think we should bring this in and make it all apply it to productivity. But I think the binary sort of interaction with content is a very fascinating thing.
Awesome. Brian, I have a little gift for you. So these shoes are made out of recycled nets that were found on the beaches of Italy because they're trapping small fish, so they're banned. So these are for you.
Thank you.
They're outside in the booth. We have a break now, so go check out some of the exhibitors, really cool stuff. And then when you get back, Edith from 500 Startups is going to be here. Brian, again, thanks a lot. Appreciate it.
Thanks, dude. Thank you.
Okay. Hello, hello, hello. Okay, so how's everybody doing? Cool? No? Falling asleep? Wake up. Okay, so our next presenter, Edith, is with 500 Startups, and I have another funny story. So, about 10 years ago, I was doing advertising and real estate, and Edith used to do these events called BizTech Day. So the actual reason why I'm in the tech world is because of Edith, because her events were awesome. I call her like the mobile ninja samurai, and she's super cool and super smart. Edith, come on down.
Hi, guys.
All right.
Are you going to do some dance with me?
You want to dance?
No, I'm I can sing. All right. I'm loving my Google I/O T-shirt. That's why I'm wearing it, and that's where I'm going right after. So I'm very excited to be here. And today, I know like you guys have many other awesome events, and I'm always a really huge fan of Nima. So thank you for being here. So before I go into like all these details about like Uber and convince you to China, I want to have a quick intro about myself. So my name is Edith Young. So I was made in China. Officially actually manufacturing in Hong Kong. And Hong Kong, if you guys been there, is the land of awesome dim sum, shopping, and super expensive real estate. So similar to most of the Chinese product, I was exported about 20 years ago. And now 20 years later, I'm one of the partners at 500 Startups, and I've put particular focus on investing in mobile, VR, and IoT. So today, I'm here because I do spend a lot of time between here and China, and I'm here to convince you why you need to think about Chinese market. But at the same time, I'm going to scare you a little bit because China market is very complicated and in some way a little bit scary. But then also I'm going to share with you how some of the companies like Uber solved this problem and been doing actually pretty well in China. And by the way, I have all these crazy stories about Uber in China, which if you guys want to know more, we can maybe, if we have time in Q&A, happy to tell you about it. So now, first, to start with, I want to convince you why you need to think about China market. So China, by the number, over 1.35 billion people in China. I think last time I checked, it's about 330 million population in the US. So these are like 4 times, it's crazy. So many people in China. Now is over 700 million smartphone users, and about 260 million of them are located in about 15 Chinese cities, first-tier and second-tier city, which I'll tell you more about it later on. WeChat, basically the Facebook Messenger of China plus more. Actually, this morning is definitely over 650 million users. There's a lot of people on messaging app. And about 21 unicorns since 2011. Unicorn, I know where is a startup conference, but basically that worth $1 billion plus. If you guys saw the news earlier or last week, Apple just put in another $1 billion into Didi Dache, which is the equivalent of Uber of China, and they are worth about $26 billion. There's over 200 app stores, which if you, actually, I have a spreadsheet of over 300 app stores, mainly because China is a land of Android. Pretty much 90% of the smartphone users in China are Android users. And Apple, in just one weekend when they launched the iPhone, I think 6S last year, sold 13 million units in just one weekend. So that's why so many very awesome CEOs been going to China. But China is really tough. Legally, think about Google got kicked out of China, device fragmentation, pretty much, Xiaomi, Huawei, all these Chinese OEMs, they all use Android fork. So it's a very complicated market if you wanted to, push your mobile apps. A lot of fraud, which I will show you a little picture that I took in China. There's a lot of fake install. It's a lot of things that is sort of fake. Most of the Chinese people wouldn't, actually afraid to even eat Chinese food sometimes, which we can talk about that later on. I'm not here for political reason. Language barriers. If you really want to do something in China, you have to speak Chinese. not knowing a language, because China market is so big, and most of the developers, they don't need to speak English to have access to such a large market. And then last but not least, the Great Firewall. Every time I go back to China, I just completely forgot that the fact that none of my email, Twitter, and Facebook work is very, very frustrating. But still, tons of people love China. Tim Cook, well, if I sold 13 million iPhone over a weekend, I would love China too. Mark Zuckerberg, and on the record, even though he was able to speak Chinese for about 20 minutes in his speech in Tsinghua, I still think his Chinese sucks. And last year, I heard from the grapevine that Travis from Uber spent over 50% of his time in China market. And last year, combined, he raised about $1.5 billion from companies like Baidu and other places just to focus on China market. So imagine, so all these rock stars are spending time over there. What are you going to do about it? So, well, let's see. One way to look at it, you can act like a unicorn. Actually, I'm joking. You can't do that. In fact, you really need to some special Kung Fu Panda move. And what I'm going to do now in the next 5 minutes or so is to share with you what are some of the Kung Fu Panda moves that Uber have done in China. All right, 8 tips. I made up the 8 because 8 is a lucky number in China. So everything is 8. And if you go to a Chinese building, there's no 4 and there's no 13. It's very, very confusing. But the 8 tips, which I'm going to go through a recap later on, but I'll give you various examples for each of these. Okay, so to start with, if you're thinking about going to Chinese market, you need to pick a Chinese name. So I can actually go through all these numbers like for hours, but just to start with a few of the familiar companies like Uber. So Uber, the Chinese brand name is Youbu. Youbu means elegant ride. And then LinkedIn, which all of us are on LinkedIn, they have a Chinese name named Lingying, and that means the best talent. Pretty good, right? But there's a few other things, as I mentioned. Numbers. So sometimes when I first sort of went back to China to work on Dolphin, which is my previous company before I joined 500, I was very confused about all these numbers. So Wu Yao 51 is not because they run out of names. It's because Wu Yao, this word, also rhyme with I want. So therefore, I want jobs. Wu Yao jobs means I want jobs, if that makes sense. So you will see a lot of sort of popular websites, they're all numbers, and for that reason, because all rhyme with certain word within the Chinese language. All right, so second thing, after you pick an awesome Chinese name, of course, I focus on mobile, so a lot of these examples are more mobile focused. If you only remember one thing from my talk is, if you want to survive as a mobile app developers or startups, China is all about third-party market. So in this, by the way, you feel free to take pictures, but this whole presentation available on SlideShare, so you can download it. So this top 8 are some of the sort of major third-party app store that I'm aware of, and being top, like on the top feature list on all these app stores, will equivalent of at least if you're top 10, definitely you'll get millions of install every day, just because of the sheer size of the market. I took a quick screenshot of Uber in the 360 App Store, and the concept of App Store SEO is still very, very similar. So in this screenshot, you can actually see Uber listed the actual word, the name of the cities that they are available. So if you think about it, no one in China is going to type Uber, U-B-E-R. They're going to type Rai and Guangzhou, for example, and that's how the name of you rise up in terms of the App Store SEO. So the same concept that what we do in the US, it apply in the Chinese App Store market as well. And then number 3, offline marketing, because in certain part of China, it's still very, very expensive in terms of data plan. So most people are quite conscious about keep downloading things, but so therefore, there are a few things that, if you're growing in China market, and because on top of that, labor is really, really cheap. So even for Uber, so this particular is a screenshot and the QR code. QR code is super popular in China. I'm not sure why it never took off in the US. But in this, partner with China, you're going to make money. So you will see people literally like hang out flyer on the street, give you a coupon code, give you flyers, and this is going to sound really, really wrong coming from me. So these are actually pictures that I took from GMIC, which is a really awesome conference in Beijing. And these are the booth babes that are standing around and giving out flyers to try to get your attention to come to that booth. And then on top of that, the one that on the right-hand side, which just cracks me up, these guys are trying to promote a Middle East app store for the developer to use, so they dress up like they're from the Middle East. Really, really funny. But you see this all the time, and it worked. All right, so number 4, mobile marketing. And most of the developers know for a fact that the same concept of mobile ad network work really, really similar in China as well. So, but it is a little bit cheaper, but I wouldn't say by a lot. But if you pay, let's say, 10 or 20 cents per install, and then sometimes go up to $1, I'm talking about in US dollar, from 10 cents up to $1, some of the 10 cents install, in fact, they are fake installs. So this particular photo, this lady, she's manually installing apps on all hundreds of these phones in front of them. And this center literally have hundreds of workers who are doing these fake install. But the developers know that they're doing it. At the same time, they sort of need it, because if you have momentum of more and more natural, like sort of organic install, then you'll go up the rank. And the higher the rank, you will get more organic traffic. So it's a sort of a cycle that you need to sort of prep for it. But most of the Chinese developers are well aware that this is happening, but you sort of need it. So this particular list is some of the popular mobile ad network that I'm aware of in China that you can potentially work with. All right, number 5 is partnership in terms of mobile marketing is really, really popular. Doesn't matter you are a news app or messaging app or various different social network, they all very happy to take your money to drive install for you. But one of my favorite integration, which I think Google is also doing that with Uber, but who knows, is the Baidu and Uber integration. So imagine if you are looking for direction, and then instead of walking public transportation, you drive your own car. Uber is also one of the options as well. But of course, they're willing to do that because Baidu invested in Uber. And also there's weather app, map app, all above are all here and very open to work with app developers. And then a few other things, as I mentioned, is a lot of offline marketing, but also one of the things I think is most interesting, very unlike in the US, right? Pretty much most of the marketing that we do apply, doesn't matter where you go in San Francisco or Chicago or New York. But in China, it's actually quite different. I know for a fact that each of the local team for Uber have their own autonomy pretty much to do whatever they want. Means the way of their own marketing or their main offering. So in here you see Beijing or Xiamen or Xi'an, they all have the different marketing flyers, give people different incentive. And I want to tell you guys a really quick story. In Shanghai, most of the Shanghai drivers drive not because they want to make money, it's because they want to look for dates. So Uber is actually the new Tinder, which I can tell you more later on. All right, and then very hyper-local communication, because most of them don't speak English, and some of them, they using Uber driver app because they want, so therefore you need to have printout, like literally like this printout they put in the car and really want to make sure that the driver is not missing out. And then you need to socialize Chinese style. So no Facebook, Twitter, and no Google. So pretty much most of the customer service is done on WeChat and or Weibo, which is Twitter of China, Renren, Kaixin, and are like Facebook. And then Tencent, yes, I didn't make a mistake. There's 2 versions of Twitter. So there's Xinang and both Tencent have their own Twitter. Last but not least, super hyper local offering means this Yuanmin Youbu, which most of the benefit go back to the driver, not to Uber. But that quality car is a little bit lower, and the driver actually told me, don't take this because it's very dirty. But still, like people can't afford it, wanted to take a cheaper option, and it was only available in certain cities. And then last but not least, I add on another one for the number 8. You do need to have a Chinese entity if you want to hire, have bank account, office. Of course, you can, at the beginning, you can sort of remote control, but if you really want to grow, you need a local entity. So to recap, pick an awesome Chinese name, optimize for third-party app store, offline and online marketing is very, very important. Socialize in Chinese style, hyper-local offering, hyper-local communication, and definitely you need a local entity. So with that, I wish all of you the best of luck. I always trying to be funny, but I'm not really. But I hope you have your own mooncake and you can eat it too. And if you want to get a hold of me, I'm very easy to find. I'm pretty much everywhere on Twitter, don't connect me on Facebook. We're not really friends. LinkedIn is fine. But on my deck and this particular presentation available on SlideShare. Thank you.
All right. That was cool. Okay, so the pitch competition. I think we had 200 and something applications to come pitch on stage. We had a team internally that picked the top 8. Unfortunately, Kevin Hale was going to be here, but he had to cancel. But the one person that is going to help me judge, is Bill Reichard, who does his How to Get to Wow presentation. If you haven't seen it, it's awesome. Howard, come on down also. So IBM is gracious enough to offer a prize to the winners. It's not $120,000 cash, but almost as good.
Gotcha. It's not cash, but it's a big check and it's fun. Hi, everyone. Okay. My name is Howard Kim. I work for IBM. IBM is a very large company. If you don't know, then you're probably really young and I don't know. Why don't you know IBM? I work for the Global Entrepreneur Program. IBM is a huge company, over 300,000 people. We have a huge portfolio of technology and products and services that are great for startups. And my job, working for the Global Entrepreneur Program at IBM, is to connect our resources to startups for free. So if you're part of the program, you get free access to our cloud infrastructure, to Watson, to our Bloomberg platform as a service. You get access to technical resources and free business mentorship. So the winner of the pitch competition today gets enrolled in the program automatically and gets 120,000 in cloud credits, not in cash, and they get this awesome check. If you are a startup and you're interested in accessing the resources at IBM, or you work with startups and you think this is interesting, please come see me at the booth outside, and thank you for your time.
Awesome, thank you. And a late addition, Edith is going to help judge as well. So Edith, come on down. Is she being mic'd up? Okay, Bill. So the way this is going to work is each team gets a couple minutes to present. We told them 3 slides, but it might be a few more. And then Bill and Edith and I are going to grill them with some questions. And then you get to vote. So we'll have some instructions on the screen. You can text in your vote. The top 3 teams, by your selection, will come back and pitch the 7 investors later on, and then one of them will win the mega awesome prize. Okay, Edith, come on down.
Great. Hey, all right, excellent. Okay, good. So we're waiting now for the first entrepreneur to come pitch. Everybody mic'd up? So, by way of introduction, my name is Bill Reichard. I'm Managing Director at Garage Technology Ventures. Delighted to be here right now. I am not Alan Yeung, right? Is that who I was supposed to be? Who was it? Do you know who I was?
Bill and
who was I supposed to be? So, in case you're confused. So, I'm the backup judge and looking forward to being with you today. And then I'm moderating the finalist panel this afternoon at 4 o'clock, where we're going to choose out of the top 3, we're going to choose the big winner. So I'm hoping that each of you will pay very close attention because you're the guys that vote. So want to hear your opinions on each of these companies. Okay? And
all right, our first company, Airmule. Come on down. You have 2 minutes. Got it.
Check. Thank you. Hi, I'm Rory, the co-founder of Airmule. Airmule is an affordable express shipping platform that connects senders to travelers. The problem we're solving in the market is that shipping, especially international shipping, is really expensive. It can also be very slow. And international travel is also really expensive. So that's why we created a mobile app for iPhone and Android that connects senders to travelers. Senders save money when they ship international or globally. They can also ship a lot faster. Like I could have a traveler leaving tonight and arrive in Beijing in 24 hours. And travelers make money when they fly. So some travelers are actually covering their entire airline ticket when they fly with us. If you look at the air cargo market from US to China over the last few years, according to the Department of Transportation, it's increased around 300%. And this has been what's been driving our adoption so far. I don't have a clicker. Got it. So this is how the app works. If you're a sender, you search for where you want to ship. We find a traveler for you. We connect you to them. You hand off the package to that person. And then you can track the package in real time, get updates from the traveler where they are, and receive a real-time update as soon as the package is delivered. We insure the package against loss or damage to give you sort of a comfortability with the traveler itself. Our cost for shipping right now to China is $40 for 5 pounds. So that's about a 75% discount on trying to ship through FedEx or UPS, and about half the price of trying to ship through USPS. We have a great team of experienced people in startups. I myself am a founder with an exit, as well as people who have worked in logistics and e-commerce and app development. We've had some great press from the LA Times, Forbes, and The Lonely Planet. And we've successfully shipped thousands of items so far from US to China. And we're available on iPhone and Android. I invite you all to help us all make world travel for free a reality. Thank you.
Rory.
Yes.
Thank you, Rory. So first of all, you know, it's tough being the first guy out.
Sure.
So great job. We had, you know, kind of sorting out the logistics. Good work on that, and in terms of handling everything. In terms of the business, a number of people have been trying this and have tried this, right? You didn't mention the other guys that have tried this. I don't know that anybody has somehow cracked the nut, or that you sort of had this epiphany and understood why everyone who went before missed what you now see. What's the answer? What is your sort of evolution from all the other guys who have tried this?
Sure. Yeah. So we started offline testing last year, and what we learned pretty rapidly is there's a few different approaches to this problem, right? One is what I'll call the Airbnb model, where you just post a bunch of people trying to ship and a bunch of people trying to travel and have them connect each other. And the reality is that doesn't work. It's inconvenient for everyone. The other model is what we call e-commerce plus travel shipping. So you're required to purchase the item through that platform, and then they find a traveler to ship it to you. We think that that narrows the initial funnel for user adoption, so it can adopt quickly enough to actually take off. Our model, I guess, is closest to, I hate to use another startup, or a large startup at this point, Uber, in the sense that you tell our server where you want to ship an item. We'll tell you right away if we have a traveler or if we don't. We don't want to waste anyone's time. We want to be convenient, simple, and delightful for every single person in the experience.
Okay. Do you have a question?
Why not like Baidu, Alibaba, Tencent just do their own? Why would they need to like ship through you?
So the people that are shipping through us are, right now, it's individual e-commerce players. So as I mentioned earlier, Daigou, private purchasers, people who are buying items for other people in China right now, which is our launch route, US and China. They're shipping with us as opposed to a local shipping company, because that local shipping company takes about 7 to 10 days to get to China. And UPS and FedEx, as you can see, is really expensive. So travelers provide this sort of middle route. And in fact, there's also a lot of travelers already doing this. So our application provides these travelers with a tool to manage their available weight, enable easy payment from senders, and also to confirm delivery as soon as they hand off the package to the recipient.
When exactly did you launch, and what's your current GMV?
So we launched the app for iPhone in the end of March, and Android came out in April. Our GMV right now is just around $10,000.
Okay. Got it. Is US-China your main leg, or are you scattered, distributed around the world?
So you can list a route anywhere, but we're honest in that we want to say we don't have any shipping demand for any other territories right now. And I think like any startup, we want to focus on a specific channel. My business partner is Chinese American. He used to work in the e-commerce logistics space between these two countries as the largest two economies in the world. And so we want to leverage that and focus and really create stability and reliability with one channel, and then learn from that and learn from those stories and replicate that model against additional channels.
And then lastly, what is the secret to acquiring both sides of this market?
So like any marketplace, right, it's one of the most difficult startups to try and attempt, right? So we're focusing on travelers. So we know right now it costs us around $8 to acquire a new traveler from US to China via Facebook marketing. And we want to acquire new travelers that are backpackers, adventure travelers, people that are already participating in the sharing economy. And we're doing this via social media like Facebook, Twitter, things of that sort. And in addition to that, we partnered with a local Chinese touring company in LA called ChinaTour.com. And they refer new travelers to us, and we give them a piece of that.
Okay. Super. Did we get all your questions answered, I hope? I don't know. Okay. Sean, thank you very much. Rory.
Next we have Bitwage. Bitwage, come on down.
Hello, everyone. Is this working?
It will.
Hello, hello? There we go. Cool. So my name is Jonathan Chester. I'm the founder and president of Bitwage. Paying international contractors across borders can take up to 5 to 15 days. Costs on average 8%. That's a World Bank statistic. And while the systems for paying these workers who take on the bulk of these costs, like banks and PayPal, they're only focusing on helping the sender. At Bitwage, we combine blockchain technology with a frictionless invoicing system that's designed specifically for helping these contractors and freelancers. By leveraging the blockchain, we are able to get funds across borders into bank accounts as fast as next day, and fees below 1.5%. Our system is so frictionless that we are actually already processing payrolls from companies like Google, Facebook, even the US Navy. Employers don't even have to sign up to our system. That is how frictionless this is. We have processed already $4 million of payroll since January 2015 and have grown 20% month over month for the past 6 months. We make about 1% on every transaction with fraud below 40 basis points. Our customer from Brazil, Cheesecake Labs, previously used to lose over 4% and wait 15 days for the funds to hit their bank accounts. But now with Bitwage, we get them into the banks in less than 2 business days, and they pay under 1.5%. And the thing is, the international payroll market is pretty big, right? $700 billion, but we're really focused in Brazil. They've got 250,000 IT professionals growing 10% year over year, and each one of those pay between $5,000 and $10,000 through our system. So, right, what's going with us right now? We've raised $760,000 from Draper Associates and Orange Silicon Valley Fab Accelerator, among others, and are currently raising investment, looking for customers and partners. Thank you.
Okay. You want to start? Okay. Just to clarify, you're paying people who live overseas who are operating as contractors to generally U.S. employers or U.S. corporations. Did I get that?
Almost. So U.S. and Europe as well. So so we can receive wages from European companies as well as U.S. companies, and the workers actually, we have workers in 90 different countries.
But the workers are generally, they're contractors, right?
Yeah.
Okay.
And sometimes they're even businesses, so they're not always actually individuals.
Okay.
But they are invoicing their clients in the United States and in Europe.
Okay, so it's, right, if they're not employees, they are contractors, independent. Okay,
exactly.
Okay, that makes sense. I get that.
And basically the way that it happens is we provide them with domestic U.S. bank accounts or within the European area, which they then invoice to their employers. And that's why it's so frictionless and easy. Because one of the issues is you have a freelancer who is trying to convince Facebook to use a system to pay them faster and cheaper. Facebook's going to take like a year, right? To change over, or they won't. They'll just say, we'll pay this other freelancer, right? Especially if we're only sending to another bank account, like us. So it makes it much easier for the contractor to get
I'm almost getting it. Is it crystal clear?
Just to clarify.
Yeah.
Because you listed, like Upwork, for example, they have their own payment all set up. Are you some sort of like an API that within Upwork they actually call, and then like a different payment option for Upwork to use, or
Right. So what's happening is that the freelancer or the contractor, again, they're getting a U.S. domestic bank account, and they just provide that to Upwork, right? So to Upwork, they actually don't even notice what's happening. To them, they're just sending a domestic bank account to a domestic bank account. It's actually cheaper for them to do that than to have to send to the international bank account in Brazil or in Philippines, right? So Upwork likes it because they're saving money and they're not changing any of their processes.
But they're not really getting a U.S. bank account, correct?
They're not really getting a U.S. bank
Right.
account.
Okay. There's a secret in there. It's you're sitting in front.
Yes,
right?
Exactly.
Okay.
Yeah, so we basically receive the funds. We're like an account receivable agent on behalf of the workers.
The IT.
We connect them with sort of like wholesale settlement partners around the world to be able to leverage the blockchain and get faster, cheaper payments on their end.
Okay, why do you even need blockchain, though? That's interesting.
So,
I mean,
yeah.
because you're doing developed to developed, you got, but is that...
Well, it's not necessarily developed to developed. It could be U.S. to Brazil or U.S. to Philippines or U.S. to...
Okay, so how are you... Okay, that's what the other piece we missed. So I get the transfer into the bank account. That's easy.
Yeah.
Now you have a bank account in the U.S. and you got to move the money to Brazil.
Right. So
that's your rail, right? Okay.
Exactly. So traditionally, the way money moves is through the correspondent banking system, right? And you have to basically send money between 5, 6, 7 different intermediaries. Banks, they can't really just send emails to each other and say, I sent you $10,000, because the bank in South Africa can't trust the bank in Argentina that email is actually sent. So they have this complex system of intermediaries involved. And by leveraging the blockchain to make a complex system, complex explanation short, you can just send an email and you can trust that the money was sent. And thus you cut out those intermediaries and make it a faster, cheaper process.
Well, we can keep going on this. I'm not sure. It's all right. Okay, but sounds cool. Very good. Thank you.
Okay, Fogo. Igro? Is it Igro or Fogo? Are you Igro? No, Igro. Come on down.
Igro.
Sorry.
All right.
All right.
Okay, let me begin. Hi everyone, I'm Andreas from iGrow. We are building the world's largest organic farm funded by you. My mother's family were farmers, but they have problem to get proper income because they don't have enough capital and land. And they are not alone. In Indonesia, there are millions underemployed farmers, while in other side, there are millions acres underutilized land and millions people ready to participate in farming. That's why we create iGrow. We connect between the farmers, landowners, and investors together to create farming. And we sell directly the crops to the customers. We are raising capital from you through our website and give you farm field-like experience so that you can know how your plantation grow. And after the harvest time, we share the profit among investors and farmers. Just from peanuts alone, we already harvested 1,600 tons of produce that bring 24% annualized return to the investors, and 99% of them reinvested in us. Since launching 19 months ago, we're already profitable by making $1.2 million GMV, and we take 20% of that for our profit. Currently, we are working with 2,200 farmers in 3,000 acres underutilized land. We already made our farmers' life better, and we changed the way how we utilize our idle land. We are in Indonesia with 27 million acres underutilized land, and we already had 24,000 acres in our pipeline. We already ready to scale to another country. Our team consists of serial tech entrepreneur, 10 years experience in agriculture, and the expert in land partnership. Together, with landowners, farmers, and you, let us build the world's largest organic farm by making our world a better place. Thank you.
Well, it's great to see you have a lot of fans in the audience.
Totally.
Congratulations on that. That's really good. So My initial feeling is that it feels like it's Kiva for farming. Is that a fair enough? Except it's investment, it's not lending. Am I close? What's the size of the investment you're asking for? What's the typical size?
The minimum size of investment from $100 to $1,000 depends on the seed that you provide.
Okay, and is it truly organic? Do you really care?
It's
You
really
do.
organic.
So you enforce organic.
Yep.
Okay, but the food is consumed in Indonesia, right? You're right.
Yeah.
Okay.
All of our crops planted in Indonesia and sell to distributors in Indonesia. We also have planned to scale to another country. Our first country will be Turkey. In the end of this month, we will plant olive oil plantation in Turkey, 600 acres there.
Do I get money back? Or do I actually get product by investing?
We have two schemes of risk management. First, we have insurance, catastrophic insurance. And then second, we guarantee 100% of your money back because we have endowment fund. We take certain money of your capital, we enter that money to endowment fund, and we will use that money to guarantee your harvest result, and 100% of your investment will be back to you in the worst case. But all of our harvest is 100% successful, and we already proved that we can bring back 24% annualized return for peanuts to our investors.
So what's the main incentive for an investor wanting to invest in this, other than its goodwill and its important?
First, they can help farmers and idle land, land owners with idle land. They also can improve our food security, and also they can get return. Our return come from 12% to 24% annually.
Okay. When you talk to your customers, to the investor side at least, what do you hear from them? Are they motivated by money? Are they motivated by philanthropy?
Both of them.
Pardon?
Both of them.
All of the above.
Yeah.
Okay. And then but the landowners are just motivated by money, I assume.
Yeah.
Is that true?
Yeah.
Okay.
Just for money, because they get income from leasing their land.
Okay.
We give rent money for the landowners.
Okay. So you've only been doing this for did I say 14 months? Is that what you said? How long?
19 months.
19 months. So so maybe 3 cycles, 4 cycles, crop cycles?
We already have 3 times harvest time for peanuts, and we will have our first harvest for banana in our 3rd quarter this year. And at the end of this year, we will have a fragrant root harvest. So as the time goes by, we will increase the variety of our seed, and we will keep harvesting every month after that.
Okay, great. Thank you very much. Salamat.
Thank you. Okay, Fogo, you're next.
Hi, I'm Dustin Bouch. I'm the CEO of Fogo. Prior to Fogo, I started a medical device company that had a 10x return on investment. I'm also an avid outdoor enthusiast, and I've always been frustrated that there's not a simple technology solution to use while exploring the outdoors. Anybody have there we go. So there's over 140 million American outdoor enthusiasts that love nature, but planning and exploring require multiple devices and services. There's no single website for finding new trails. There's no single gadget for staying safe on the trail. You have to take a smartphone or handheld GPS with you for navigation. You need to take a walkie-talkie with you if you plan to stay in communication while you're off the grid. And you have to take a flashlight with you if you plan to be out after dark. Finally, there's no fitness tracking integration. If you want to track your activity, you have to take a Fitbit with you or something like that. The bottom line is the solutions here are cumbersome and confusing. That's why we created Fogo. Fogo starts off with a nationwide database of trails on our smartphone app that seamlessly communicates with our all-in-one trail safety device, which includes a GPS, a walkie-talkie, and a flashlight all in one. The Fogo also has some really great safety features. We can automatically send a message to your friends and family if you're injured or in need of help. And then finally, at the end of your journey, it automatically uploads your fitness metrics back up to our smartphone smartphone app and then onto the web so that we can offer you better recommendations for trails and hiking partners in the future. We were finalists at the Engadget Best of Show at CES. We were also finalists at the TechCrunch Hardware Battlefield. We had a Kickstarter campaign over the summer and raised over $100,000. We're shipping those 500 units next month. We have a lot of really engaged backers that are super excited to get the product. My contact information is at the bottom. Thank you.
So I got to admit, I'm sitting there thinking, FOGO. Fear of going out? Is that really it?
I like that, and we've used that
yeah?
a little bit, but initially it just started out, it means fire in Portuguese, but that acronym,
okay.
FOGO,
You knew that.
FOGO the child.
Oh, okay. Okay, right. Okay. So, sorry. Slight distractor there. So how much is it? You didn't tell us how much it is.
It retails for $299.
$200.99. Okay. So that's pretty expensive.
It is, but when you think about the products that it replaces, such as a handheld GPS, a flashlight, and a walkie-talkie, it's actually cheaper than the combination of those solutions together.
Okay. So how do you, so it's not the 140 million people who hike. It's a narrower group of what is define the narrow group of people, the very specific personality type of the person who wants this thing?
Yeah, so the specific demographic of people that use the FOGO are somebody that do hiking off the grid, and they need a really good navigation and a communication solution while they're out there. So they go out with buddies, they get separated sometimes, they want to be able to communicate back to their camp. So they're off the grid, their smartphone is pretty much useless, and they want to be able to track their activity to see how far they've gone, their elevation gain, what their distance was, stuff like that.
So the chip that you have is a GPS, just GPS, is a cellular also? And what is the BOM?
It's not cellular, it's GPS, so it works completely off the grid. So there's no Wi-Fi networks, no cellular networks required.
Okay. What's the BOM cost?
The BOM cost is right around $100. Okay.
Great, super. Anything
Thank
else?
you.
So wait, you said you launched. You said you raised $100,000 on Kickstarter. Does that assume? Am I assuming what? That you sold for $200?
About 500 units. Yeah, we sold them for less than the retail cost.
Right,
of Kickstarter.
I was guessing.
About
Okay, so you got 500 units. You haven't shipped them yet, though.
No, yeah, we're just wrapping up production now. We're doing final assembly, and we'll be shipping them here at the end of the month.
Okay. All right, that's where you are. All right, super.
Cool.
Thanks.
Cool. Thank you.
Thank you.
Okay. Lucid, you're next. Come on down.
Hi, my name is Han Jin. I'm the CEO and co-founder of Lucid VR. Have you ever been far away from loved ones? Your family, your kids, your partner? I was born in China, raised in Germany, and came to the United States, so excuse the strange accent. But I wanted to create something which could bring me closer to my family. That's why I created a stereoscopic 3D camera for virtual reality. It captures the world the same way your eyes see it, which means with true depth and peripheral vision. If you watch it in virtual reality, which means you take it out of your pocket, you take a picture, you Wi-Fi to your mobile phone. As soon as you slide your mobile phone into a Google Cardboard, you have the freedom to walk and look around. What our team looks like. My background is in hardware, with a master's from Berkeley. I worked as a program manager for a couple of years in consumer electronics. My partner is from Stanford, has a PhD in computer vision, and worked on image processing computer vision applications for the military. We are surrounded by a great team, which brought this product to life. And what we have achieved so far is a successful crowdfunding campaign on Indiegogo, a partnership with many brands to create content which drives the community. And we are backed by one of the top ODMs in the world to bring this product to mass production and shipping by the end of this year. So if you believe in sharing your experiences, not just through 2D pictures or Skype, but being actually there and feeling like you are with your loved ones, then join us and bring this product to life. Thank you.
Good to see you again.
Good to see you.
I met with you guys 3 times this week. So, all right. So how do you actually capture the full 360, the whole room, not just peripheral?
Sure. So with one device, you can capture as much as your eyes can capture, which means only in the front, 180 degrees. With 3 of those devices, you can put them into a triangle, put them in a rig, and then you can capture 360 3D experiences.
Okay, so you position this as, it's interesting, you're positioning this as a way for families to share experiences with their distant loved ones. That seems a pretty narrow definition of the opportunity here.
That is correct. If you look at the opportunity more from a distance perspective, which means traveling distances, bridging distances, but through virtually and virtual reality, you can look into other applications, because it's not just expats who are maybe traveling abroad, following their dream to be in a different country, far away from their family, but also sharing experiences which are far. Like, for example, if one of my friends is on the East Coast at an event and I'm on the West Coast and he is streaming me live to that event, that's an experience I want to experience and I want to have to be a part of.
Okay, so you see it very much as personal. What's the cost? What's the price for the camera?
Currently, the camera costs $399.
$399, and you say that if you want, you can put 3 of them together, and I assume you have the software that will stitch the 360.
Yes.
Right. Okay, but that's $1,200. Who's going to do that?
Compared to the devices which are currently on the market, which are 360 3D,
Yeah.
you're looking at Nokia Ozo at $60,000, and other devices like Google Jump, which we are looking at $10,000 to $15,000.
Right, but they're going after the professional side of the world, right?
But that doesn't mean that we cannot capture the same quality and experience as well with the 3D.
So you're saying that you intend to go after the professional side of the world with your technology?
No, you were asking in terms of a 360. If you are comparing to 360,
right.
it's $1,200.
Right, but for your target market, it's hard to see. That's all I'm saying. So, okay, and what is your BOM?
The BOM is around $100.
Okay, so you have a little more margin there. Okay, all right. And so, where are you again in terms of launch?
We will be shipping by end of this year.
End of this year. All
That's
right.
correct.
Okay. All right. Good. Anything else?
No.
Okay. Super. Great. Good to see you.
Thank you. Overnest, you're next.
Hi, I'm Ed, CEO and co-founder of Overnest. At Overnest, we believe you should encrypt everything and search anything. Enterprises nowadays have to choose between on-premise or cloud. The typical rationale for choosing on-premise has always been security. But as we know, what can be hacked will always be hacked. And for on-premise, even if you have your data by firewalls or by alarms, you still see headlines filled with data breaches. So how do you move data to the cloud without compromising security or privacy? Because at Overnest, what we do is we allow you to encrypt all your data so that your data, you don't have to trust a third party, you don't have to trust their employees. And at the same time, we allow you to search unencrypted data as easily and as quickly as Google can search on web pages, all without revealing your encryption key. To demonstrate our technology, at TechCrunch Disrupt last week, we actually launched Git 0, the world's first and only Git hosting allows you to encrypt all your source code while making it available to search. We already have university, telecom, and startups using Git 0. Our security has been vetted by Stanford and Johns Hopkins. At Overnest, Git 0 is just the beginning, and we allow you to encrypt everything and search anything. Thank you.
So, well, congratulations on your traction to date. And so it sounds like these guys are diving into what you've got, and they've decided there's something valuable here. But I need a little help, okay? I need a little help. So So you're not exactly offering a cloud solution. I'm trying to understand this intersection thing. Is it cloud or is it not cloud?
It is actually cloud. What we're saying is that you can move your data now to cloud without worry about either government subpoena your data or worry about the company who actually hosts your data or even the employees of the company that hosts your data. We're basically allowing you to move data to the cloud without worrying about all those things.
Because it's encrypted all along the way.
Because it's completely encrypted. So, yes.
Okay, and so part of your secret sauce here is that, so that doesn't sound tough.
Right.
So, but you've got some other secret sauce about key protection, right?
No, actually, the secret sauce is we allow you to search.
Right,
encrypted
data.
Yes.
Right, okay. So there are a few guys who are doing this, right? We've talked about this before, right? So, so what do you own that other, what can you do? You're saying you can do something that nobody else can do, which is to search encrypted data without decrypting it.
That's correct.
Is that right? Okay.
That is correct.
Was that obvious to you? Okay. Okay.
Sorry.
So I know there's something impressive in here,
Right.
but that's the impressive thing, right?
Right.
So you never decrypt it in order to search it.
Correct.
That's it. Okay.
That is it.
Okay. Thank you.
Thank you.
Quickly, so the target is developer will be using this, so it's going to sit on top of Amazon.
Well, actually, there's developers can use it, and yes, developers can basically create applications that are using this to encrypt all the data that enterprises has.
So you're backing on the fact that AWS is not going to do anything relates to that?
Well, because searchable encryption, it actually doesn't exist. Before us, there's no practical searchable encryption. The key is practicality. Searchable encryption has never been, outside of academia, has never been used. And even with the academia methods of doing searchable encryption, is actually not practical, because when I say practical, it means fast. It means Google fast. That's what I meant.
How are you going to charge for this?
Well, for Gear Zero, the first product it's basically like GitHub. You charge per repository, depending on how many repositories you have. For the service itself, you're going to charge on how much data you have.
Okay, so what does that mean if I'm, Johns Hopkins? What sort of premium do I have to pay to get this benefit?
The premium you have to pay is basically you basically charge in terms like how much data you hosted in the index itself, and also how much data that's being passed through and how much API costs. Very similar to AWS, how AWS charges.
Right, but so I'm asking for the premium, right? So what would be helpful is if we know, so Johns Hopkins has to pay $25,000 a month to AWS or somebody for being their data repository. They only have to pay an additional $200 a month for year. Well, I don't know what the number is, right? So I'm trying to figure out what the premium is over what I'm paying anyway to have third-party hosting of my data.
So the premium, we actually don't know right now.
Okay.
We're not charging this particular model yet. Right now, what we are selling is Gear Zero, which is the source code. But for enterprises, we're actually talking about pilots, which allows you to, and then we'll most likely charge basic on usage. But we don't know how much it is at this point.
Okay, so it'll help you, right? Okay, okay, great,
So
thank
we
you.
don't know how much
Okay, I get it. All right, thank you very much. Anything else?
No.
Okay.
Philipp.
Good afternoon. My name is Bill Inman. Over the past 10 years, I've been fortunate enough to start 2 staffing businesses that have grown from idea stage to over 15 million, and a third that grew to over 3 billion. About just over a year ago, 2 founders and I started PeopleLoop to disrupt the $400 billion global staffing industry through a unique cloud-connected recruiting network. Over the past 14 months, we've launched our online platform, which is named The Loop, and we've created over $6 million in contractor and temp labor payroll on 4 continents. We work with companies like Tesla, Gatorade, Capital One, ESPN, and Disney. There's a problem in the industry, and you can see that here. Essentially, companies that are traditional staffing companies, and many of you know Adecco, Randstad, and Manpower, They are tied to their traditional branch office model. They have heavy costs around their branch office model that they pass on to their clients. It's an antiquated model that hasn't changed since the 1950s. They're offline resources, but they are full service. On the bottom right, you'll see companies like Upwork, LinkedIn, and Fieldglass, which are pure online services or workforce technologies that either have trouble with workforce compliance or they create more work for the client because they're not a full service solution. PeopleLoop and our network, global network of recruiters, solves this problem by providing a full service online solution that outprices and outperforms these others. As you'll see here, basically our clients log into our Loop system, they post a job on our platform, we release their job to our network of recruiters, and we tap into over 260,000 independent recruiters across the globe. This solution lowers costs. We're about 25% less expensive than any other of our competition. We lower risk and we lower time to hire. As you can see here, we've worked with companies, as I mentioned, like ESPN, Tesla, and Disney. We are currently a cash flow positive business and have funded our business through one angel and all of our founders. We're raising our seed capital so we could ramp up our Fortune 500 pipeline and reach our goal in 4 years to reach $1 billion in payroll generated. Thank you.
Okay, so, did you want to go?
What's your business model today? How do you charge?
Good question. We, amongst other business models, we charge a percentage of the total payroll we generate. So every time we recruit and payroll a worker, we get a percentage of that, which could range anywhere between 5 to 12%.
So what I think I heard is you talked about this network of recruiters
That's
out
right.
there.
That's
So there's a whole bunch of people in this network that it sounds like you're sort of leveraging this broad network of recruiters, and then you're offering an HR technology on top that provides this compliance stuff. Am I getting this?
You absolutely are. The
Okay.
Loop platform is a marketplace where we're connecting independent recruiters around the world and
Okay.
even moonlighting HR professionals who want to make more money in their spare time.
Okay.
These people are paid for the success of recruiting for the clients that we bring to the table. So we track all that inside of our system and give our clients access to this network. In addition, we do some network-enabled things like all the recruiters are rated like Yelp. Every
Okay.
applicant, they get a 1 to 5 star ratings. So in the future, clients can see who's performing and who's not.
Okay. So are you getting, in terms of your acquisition model here, are you getting through the network, are they moving their clients onto your platform?
I'm so glad you went there. That's the most exciting part of our model is
Okay.
that our independent recruiters and freelance recruiters become sales agents for us. We just won a client yesterday. We're going to start recruiting in Malaysia. It was brought to us by one of our recruiters. We incentivize them and bring them into our commission structure for that.
Okay.
So not only do we have a success-based, no-wage independent recruiter base, but we also have a no-salary sales agent team as well that comes with it. It's really exciting.
Okay, so you're aligned, so there's not a conflict between you and the recruiters in terms of stealing their business.
Oh,
You're
not at all.
aligned, they want to bring their business onto your platform.
Right.
That's
now,
the thesis.
We handle
Okay.
for contract and temporary labor, we handle the funding, the workers' compensation, the tax remittance in 60 countries.
Okay.
So these are independent recruiters who couldn't get into Tesla, who couldn't get into Disney. But clients like Disney engage us because they can't engage individuals through their procurement department, right? They want to work with these specialists, these micro-niche specialists, but they don't know how to aggregate them. We're the first to aggregate this freelance 260,000 global recruiters, hundreds of thousands to millions of HR professionals who want to make extra money in their spare time and possibly move to this to become their full-time income.
Okay, all right. So Tesla does not see all of the stuff behind your platform. They just see the results, I assume, right?
That's ultimately, they just want people.
Right.
But we do give them access to the Loop, our system, so they can see which recruiters are performing. It's ancillary to what they really want. They don't really need to see that, but it is interesting to them to see which recruiters are performing and why.
Okay, all right.
Cool.
Else?
Yeah,
Okay,
thank you.
Great, thanks.
Okay.
All right.
Okay, last but not least, all the way from Detroit, we got Split.
Thank you, Nima. Hi, everybody. My name is Yeung, and I'm the co-founder of Split. Our founder and CEO, Anya, isn't here today because she is in Austin, pitching in front of investors there, as well as meeting with city officials, because Uber and Lyft aren't there anymore. Anyway, that's a joke. So Split is a carpool platform for enterprises. Our customers are companies. And you know why? Because traffic really sucks. You know, there's 128 million commuters in the US, and they're spending 6.9 billion hours a year stuck in traffic, leading to $160 billion in lost productivity. And what we've done is we built a great platform where we sign up companies. Companies pay us $150,000, up to $150,000 a year annually to recruit their employees, match with each other, to carpool together using their own cars. And they create incentive packages where they help promote the density, they increase productivity, and the employers benefit because they have greater employee retention, they're able to free up their parking spots, and a whole host of other advantages. Of course, there's many that have signed the presidential pledge, President Obama's pledge for sustainability, and of course there's new commute trip reduction laws that fine companies if they don't implement a transportation plan, which brings us to our traction. So in Techstars, over the 45 days there, we closed 7 early customers, yielding 35K ARR. And the next 45 days, we actually plan on closing another 4 customers, yielding another 240 in recurring revenue. And something that's not in this slide is we are closing on a major Detroit-based automotive manufacturer, but we're under embargo by their PR, so I can't name which one. That's going to yield another 300K in ARR, and we've got a deal pipeline worth another 800K. So you all add all that together, by the end of the year, we're going to make about 1.2 million annual. Thank you.
Okay. Okay. I was following all those deals and all those Ks and all the so congratulations on the traction.
Thank you.
You know, we all love the idea of this, right? We all want this to happen. And so many people have been trying to figure this out, right? So, and nobody seems to have cracked the nut yet. What is your epiphany here that is going to make this time, corporate sponsored, ride sharing, carpooling will now work thanks to Split?
I had a great question, a great answer prepared, but it was for Kevin Hale from Y Combinator. Because I was going to make a joke. There was a YC-backed company that went out of business that was trying to do what we were doing.
Yes.
And the problem was they were B2C. And so if I'm driving with you, Bill, and we're going to work every day, if there's a third party that keeps charging us a transaction fee, we're going to get out of the system. Right. That's not going to work. The only way that works is you got to go to the customers who are the companies. The companies will pay you. And the best part is they're also, in addition to that, they have tax breaks where they can put in another incentive there, a few $100s, up to $255 a month from the federal and both state-based that can encourage further carpooling. So they already have an incentive to do that, to build the commuter community, to increase, to get rid of the siloed departments.
Okay. I mean, and that was true long before you came along. Right? I mean, you're not the first corporate-sponsored carpool solution.
That's correct, but the corporate ones, the ones up before us, they're kind of web-based too, and so they had adoption rates about 3%. Our current data is already showing adoption rates about 15%, and that is a lot higher than other companies, and we're basing off of a very tremendous program that was developed at the Children's Hospital of Seattle, where they were able to raise it to 38%, and that's the highest this country has ever seen. So we're going to try to get there, in a few years' time, and we're really looking to scale up right now.
Okay. I just have a quick question about how, when you listed all these car companies like BMW or Audi or Airbnb, you're still serving the employee, right? Or is there any special deal term that you actually?
You're hinting at something that we're signing with those guys. We are actually going to be the first carpool platform that's going to be integrated into the head units as well. So, whether it's the BMW mobility platform, whether it's some of the other platforms that I can't name right now, we are actually going to be working with their tech teams to build it so that it's distraction-free. Because one of the things you don't want to do is have somebody operate their phone while they're trying to pick up somebody. You want them to be able to control it from their steering wheel.
Interesting. Cool. Thank you.
Okay. So what is the economics for the corporation, and so each adopter gets to pick, each company gets to pick kind of how they split the economics, right?
That's exactly right. So,
Okay.
so because of our deep understanding of corporate culture and because of our sales team, which has decades of experience in B2B sales coming from Deloitte and KPMG, they know that what works and what doesn't work. So if it's a parking constraint, then we could give them ROI of, okay, free up this many parking spaces, you're going to get a 10x return if you adopt split. If it's a matter of incentives, based off of different municipalities, we'll say, adopt split, you're going to be able to get this much in tax credits because because you're complying with these laws. So, for example, Intuit in Mountain View, they have to pay $1 million to the city of Mountain View if they don't reduce their solo occupancy vehicle rate down to a certain percentage. And we're helping a lot of companies like that, make sure that they comply.
Okay, great, super, thank you.
Thank you.
All right.
Awesome. So those were 8 out of 200 companies that we picked. We hope you like them. So here is the voting system. Text to that number, your favorite. The top 3, again, will pitch to the investor panel this afternoon. So we'll leave the voting open for the next 10, 15 minutes. And then we'll have a lunch, and after lunch, we'll continue. All right.
Are we allowed to vote?
Yeah,
yeah, it's anonymous.
Oh, okay.
You can vote.
I'm texting too.
This is going to be tough, don't you think?
No.
Well, you were supposed to say, boy, they're all great.
So
it's going to
hard.
be so hard to pick between them.
Wait, 650-353.
4008. 650-353-4008. Okay. 0.
Actually, text.
3, 5, 3. Okay, so do we text the number, the word, or the company, or do you care? Nima.
Yes, sir. Sorry.
If I just text a number.
Yeah. Text the number.
Just a number. That's all I have to put in.
Yep.
And how many votes do I get?
1.
Just 1?
No cheating, Bill.
Okay. Okay. 8. Okay. You're gonna tell me who you voted for? Wait, oh, there's one of your companies here, isn't it? No. No. You sure? No. You're not.
And once you
biased?
voted, you're more than welcome to head on out to grab
split.
lunch.
No. Okay.
Beat the rush.
Good to see you. Good working with you. Are you on this afternoon?